All right, what's up, traders? Welcome back to the channel. Yeah, we're gonna go live a little bit early this morning as we got CPI coming out at 8:30. We're gonna try to get some trades going today. There is a massive distraction happening just outside my bedroom window as there is a tree being removed. So hopefully you guys cannot hear that, but it is very distracting for me. And he could be there for a while as it is a palm tree, and chainsaws just do not like palm trees. So we'll see if he can get it down and out of here quickly, and we'll see if we can't make some money while he is trying to make some money. All right, first and foremost, Bitcoin had a big down day yesterday after seeing a nice pop like during the Asian session. It was during the London session where it topped out at a fib extension that we've been watching for a while on Bitcoin at 1.618. That fib extension, we pulled this a long time ago. It's coming from this low right here and this low. And then that gives you your fib extensions. I do have a fib retracement in here, but that is just for the July range as we are in August. And as long as we're trading above the midpoint of July's range, then Bitcoin looks better than it does worse, if you know what I mean. However, I don't like when we do put in these swing highs and then reject them instantly, as it looks weaker than it does look strong. So we'll see if Bitcoin's able to hang on to these gains right here. Now, if we look at our liquidation levels over here, well, let me pull it up, the liquidation heat map. And you can see down around here, let me go out a month. Excuse me. Just going out a month. That newsprint will be out here in about 9 minutes. Ooh, where did it go? Wait, what's going on? Bitcoin liquidation heat map. There was a white hot liquidation point. Maybe it's just on a week. Let's go out on a week here. Yeah, there it is. There is a ton of white hot liquidity setting down here at around 115.5 is when it starts. And it can go as low as 113.8. Then you have a pretty decent sized spot there where you have thin liquidity. But obviously, if price gets all the way down here, this liquidity will fill in. So I'm not expecting this to stay empty as price moves lower, if price moves lower. Now, if you look above you here, you don't have much liquidity. So the obvious signal here would be to look for shorts. Unfortunately, it's a bullish market out there. Now, we did see a small pullback yesterday on the risk markets, and the VIX did bounce a little bit away from the February lows, I think. No. So let's get rid of this. Yeah, those are going to be January lows. Sorry. So we did bounce from here, and then we got back above the yearly opening range. But as long as we're under the yearly opening range on the VIX, I do like risk markets to the upside. So this does look okay. Everything still looks okay. As far as trades that we're looking for this morning, we're going to be mostly focused on Jasmy. Now, Jasmy does have utility. It is not just a meme token. All right. So if Bitcoin and Ethereum continues to stay bullish, then this can too. But if alts, because we did see most of your meme tokens yesterday get obliterated. Fartcoin at one point was down almost over 20%. So they've given back most of their gains. And I do believe Pingu, Bonk, and Fartcoin are all three under the yearly opening range. We'll check that to make sure, but I'm almost positive. So we're going to watch Jasmy, and the trade that we like for the short side is going to be 1682. So if we get up in here and reject today, we're going to be looking to sell Jasmy for a short. When CPI comes out, we could spike up there. We don't know. CPI isn't really expected to be like a major miss or anything like that, but I'll go ahead and give you your numbers. Excuse me. Sorry to do that right in your ears, but here you go. So on the core inflation month over month, we're expected to tick up by 0.1%. And then on your year over year core inflation is supposed to tick up to 3 from 2.9. Month over month inflation rate, this is going to be your CPI numbers. Month over month is expected to tick down 0.2%. And then your year on year, the CPI number is supposed to tick up from 2.7 to 2.8%. If we look at ETF flows currently, this is updated up to today. So obviously today's will be on here tomorrow, but you can see last week and into the 1st of August, there was heavy outflows on the ETF. Well, the 1st of August was a big down day, so that makes sense. We had 2 more days of outflows, the 2 sessions following, the 4th and 5th. But then since the 6th, every day, every normal trading day since the 6th has been positive. So we've seen inflows on Bitcoin. And that's important because if Bitcoin is going up, then your utility tokens could also go up. As ETH is currently up today, 1.5%, 1.6% now. So this is what's keeping Jasmy and Litecoin and your stronger ones up. It's Ethereum. It's mostly Ethereum. Dominance also pushing down. So remember, if dominance is pushing down, Ethereum is pushing up, then your utility tokens can get a rise from that. We are expecting dominance to stay weak. If I pull up the 4-hour chart here, you can see that there is a clear and obvious support right here. You put in a bear trap right there. Now, this is not a tradable asset, but still, all the other ones that make this happen are. So we do mark support and resistance zones. As you can see yesterday, we were looking for the live stream, we were looking for dominance to reject here. After we put in this up close candle, this candle, we were expecting it to be a down candle, and it was. So dominance is rolling over. It is rejecting old support, which could potentially be turning into resistance now. So I don't love the short trade on the utility tokens. So just keep that in mind. The levels that we are watching, once again, you're going to have a monthly resistance level here on Jasmy. That is 1657. And then the last spot will be up here. That's 4-hour resistance. That's why we're watching it. As far as your moving average structure here goes, right there is your 100 on the 30 minute. So as of right now, this is structured bullish. You've got 3 minutes until we get the CPI number. And also on daily exchange volumes, we are seeing an uptick. Now, oh, you can't see that. Son of a biscuit. Give me 1 second. On the daily exchange volumes, we are seeing a tick up. This can be both bullish and bearish. Here's that tick up. Heavier volume or higher volume is definitely what we want to see for breakouts to continue to the upside. And as long as the VIX is weak, we do have an overall longer-term bullish bias on these things. So we won't know if this is sell-side volume or buy-side volume until we see the breakout happen, or if we see everything else start to roll over. Now, like I said, your meme tokens have been absolutely demolished. Yesterday was a big down day on Fartcoin. You rejected everything up here. You rejected your weekly 21 exponential. You rejected your daily 21 exponential. You rejected July's opening price. You are under August's opening price. So you were bearish in the month of July after being bullish all month. The last part of the month, it sold off. And so far in August, we had set a monthly low. Then we went up, set a monthly high at the July open, and then rolled over. So clearly this is weak. Weak, I tell ya. Could it be moving higher now? Absolutely. We just liquidated August's lows. Now there is June's lows down here that have not been liquidated. So I mean, it could go up from here. It is pretty oversold. But I mean, it did get back up. So I mean, this thing could get right back to being massively oversold. It's weak. So I like it to the downside. I will be looking to short spikes. Not today. because it's already down so much. And then if you look at Bonk and Ping, let's go look at Pingu first. Pingu's the only one that has not lost the yearly opening range, is currently testing the daily 21 exponential moving average as well as August's volume weighted average price. So if Pingu's going to be a trade higher, we want to see it find support in this range somewhere today. And then Bonk, of course, yesterday lost the 21 exponential moving average. It lost its weekly volume weighted average price. And I don't have the August VWAP up for whatever reason. We go ahead and put that up. You will have lost that as well yesterday. So yeah, now we're going to get the news. And the S&P 500 spiked up. Let's see what we got here. Euro also spiking up. And I will pull it up for you so you can see what is going on. So we got a miss. We got expectations were hit. This is a miss. They wanted 3. We got 3.1. Yeah, but your core, your CPI number, not your core, your CPI number actually had a downtick. So they were expecting 2.8, you got 2.7, and then this was within expectations as a lower move. So your CPI number is lower, but your core inflation rate is higher. So it's a little bit of a mixed bag here. If you look at JASME, now you're going to see that it's well above the level that we wanted to watch for shorts. So you have to be very careful here. The ES is spiking hard. Here's your ES on an intraday basis. You are spiking very hard. So is your NASDAQ. Tesla getting a move higher. Apple, Microsoft, Nvidia all spiking up. Gold had a pullback yesterday. If gold continues to pull back, we like it. We like the risk markets up higher. All right. So going back over here to the charts, this can be faded. So don't get too down just yet. If you want to get long, obviously you need to buy supports anywhere there's support. So JASME at monthly res is a potential support zone. It's an old resistance. We'll see if it flips and holds support. I don't like it to the upside. I don't like that your meme tokens are getting absolutely wrecked. There's a reason for that, right? Clearly, when your meme tokens and all the risk markets are just slowly trending higher, then that means everything is good, right? Everything is good underneath the hood. If you were a mechanic looking at an engine, it all looks good. But when your meme tokens are getting smashed, then that says, okay, something else is going on here, as people are not willing to hold those meme tokens any longer. Why not? What's going on? Are they moving it? Are they rotating that capital into Bitcoin, or are they moving that capital into safer assets? And as far as for Fartcoin's sake, are they just getting the hell out because it's been getting killed since the back half of July? Those are all questions we have to ask ourselves today. But I am going to be looking for the short on JASME if it gets back under that 0.01682 level, as that is 4-hour resistance. So this could just be a liquidity run up here. So if you like to short it or want to short it, could you short the liquidity run? Yeah, obviously you can, right? Obviously you can. And we could see this get faded at 9:30. So coming out here a little bit early just to see what happens with the news. We can see it's a little bit of a mixed bag. That is crazy. I was not expecting that. So yeah, we're back down to 2.7 on the CPI number. And oil's been going down, but that won't have an effect until the next CPI number. So here goes the liquidation on JASME. What are we doing on Ethereum? Okay, we're just liquidating on Ethereum as well. I can't, people want to buy Ethereum at highs. I get it. I understand. right? You missed out on this entire up move and you want to buy the highs. Yesterday, you traded up here and you rejected. So we have to give this time to see what it wants to do. As far as Jasmy goes, if you look at Jasmy on a 3-hour candlestick chart, I don't really look at the 3-hour that often, but you can see here for many sessions, 3-hour candles, every one of them except this one has a large upside wick. So that suggests that people are absolutely selling this thing. Now, the fact that it can't break down is also suggestive of bullish pressure. So, I mean, I like it lower based on this. If this candle breaks out and is trading up in this area around the 1764 area, I no longer like it short, because that's upside continuation. We're not looking to short an asset that is bullish and getting upside continuation. So we'll take a small entry on the short for now because it just liquidated. Very small position size, because we don't know what it's going to do yet. But we don't want to miss it either. So we'll go into it small. As far as how am I doing so far this week? Well, on Monday, it was a yesterday, it was a slow day at the beginning of the session. The first half of the session, I closed out the live stream being up only about $90. And then yesterday evening, I shorted Bonk because Bonk was clearly rolling over right here. So we ended the stream yesterday when we were putting in this up thrusted candle, right? Well, we traded right into resistance. So I ended up watching where this candle closed and I shorted it. I don't remember if it was in this candle or this candle, but I know my short is right here at like 26.57. So I took profits on that trade. Here it is. So right here's the Jasmy position that I just opened. And then right here is the Bonk position. I took profits, $253, and we currently have an unrealized gain of $200. So this right here bumped my wiggle room up a little bit for the week. Every week I try to close the week out green, and by taking profits whenever I'm right on my positions, that allows me to get a bigger and bigger, like, breathing room, if you will, right? There's plenty of breathing room between me and going into the week negative. So that's good. And since I have taken that, had the $90, I'm up about $320 this week. I can afford to risk, $30 to $60 on this. Now, I've already lost $30 on it once this morning. I took a short on it, and when the news came out, it stopped me out. So I'm down $30 on it already. I'll be willing to go down another 30, and then I will chill, because I don't want to give back my gains. And I'm not going to try to force my opinion on what I think is going to happen on this marketplace, right? Just because I think it's going down doesn't mean I have to keep shorting it. If you keep looking at your risk assets over here as they are making fresh highs and pushing, Jasmy, Ethereum, Bitcoin, all of those can do the same thing. Higher inflation means the Fed will more than likely cut interest rates. So even if we do get a higher inflation tick, it still keeps the Fed in a rate easing monetary policy. And easing rates is typically bullish for risk assets. So if you were going to long one of these alts, the meme tokens that got destroyed yesterday, it would have to be Pingu, as it's the best looking one. It's currently testing the daily 21 exponential, and it is still above its August open and the yearly open. So you're still up on the month, you're still up on the year, and you did not give back all of July's gains. If we fib Pingu for the month of July, you have not even given back half of those gains. So for the month of July, Pingu is strong. And in August, We haven't even retested the midpoint of that yet. You can see there's clearly potential support in this area as well. So if you lose your 21 exponential, next place to target for the downside would be the yearly open and then the midpoint of July. But if it holds here today, intraday support, then maybe we're looking for a long. Note the structure. The structure is bearish, but we could have just set a weekly low. These are things we will not ever know until it happens, until we look back and say, well, yeah, that was the low. But you can trade that. You can anticipate that potentially happening and look for an area in here to put on risk. I really don't like what they've done to Farcoin and Bonk. So as long as we're trading under the weekly volume weighted average price, which is this green VWAP up here, I like this still to the downside. So for me to keep my near-term bullish bias on Pingu up, I need it to be trading and holding support up in this area. As long as it's down here, it's still, this is just a shortable event. It has to prove it's still strong for me to get long on it. So we're pushing up on Jasmine. We're pushing higher. There is daily supply here. This supply level is coming from the up closing daily candle that we put in on July the 27th. Was a Sunday. The reason it's supply is because it was a breakout above resistance. This would have been your resistance point here. You closed above the 200 exponential moving average. Then you liquidated that high and rolled over. So this is supply based on the reaction that happened this day. This daily retested it and confirmed it as such as you got a move lower. Now, these are typical areas that we look for potential short entries. However, so do a lot of other people. So a lot of people are shorting this right here based on that level. That could mean that this thing breaks out strong today. That's why we don't really love shorting it if it continues to make fresh daily highs. At any point, it could fail, but you just got to manage your risk. As far as the way that I like to look at it is there really is no need for it to continue to push up if it is going to roll over. Now, of course, that has no bearing on the marketplace whatsoever, right? Because it just takes time for these things to happen. Whether it's an up move or a down move, it just takes time. Risk markets pushing up, putting in that big, strong candle. It is not quite fresh all-time highs yet, but NQ is real close. The all-time high on the NQ futures is 23,845. We're at 803. I mean, you only need to push up another 40 points on the NQ and you'll have a new all-time high. And 40 points inside of an NQ range is nothing. As I would typically be aiming for a 50 tick or 50 point move if I was looking for an intraday scalp, because we know that the NQ can put in a 150 point move on a day easily. So for it to go up another 40 points is no problem, is basically all I'm trying to say. All right, good morning, everybody. How's everybody doing? Hopefully everybody's making a lot of money this week. We're going to keep Jasmine on watch here, see if we can't make a little bit here today. See if they fade this upside move on risk markets. Your expected move. Oh, also this week is OPEX. We have options expiry this week. It's not triple witching, as your triple witching only happens 4 times a year and it happens at the end of the quarter. So you won't get triple witching until September. I believe it's the 3rd Friday in September. I'm not 100% positive on that, but this is just an OPEX. So we do have an AM expiration this Friday on the ES futures. And as far as your expected move for this week on the S&P or the SPX cash market, is going to be 64.74. That's the top edge of your expected. This is the options expected move. This is what the market makers price in based on the VIX and based on everything else. And then the low edge of that expected move is 63.04. We did this live yesterday. I usually do it on Saturday. I just like doing it on Saturday better, but unfortunately I didn't get to it till this week. So it is only an 84 point or an 85 point move for the week. So even with CPI and even with the other data points that we have coming out, or the high risk event news, you're only getting an 85 point move. You have an RBA interest rate decision that's not really going to, you already got it. It's not really going to affect the S&P 500, but as far as what will, you got PPI, not a huge moving data print, but it is high risk as you got 3 bars there. And then you've got retail sales on Friday and Michigan consumer sentiment. And Michigan consumer sentiment has been moving up. So they are expecting it to move higher, up to 62, up from 61.7. That's good, as Michigan consumer sentiment has been known to make the markets move. So really and truly, Thursday, today's Tuesday. So Thursday you got PPI, Friday you got news. Don't really have nothing else for the day or tomorrow. Last week was pretty like a very slow week. The week prior to that was very heavy, as we did get a lot of data prints. We had the Fed, we also had NFP, but last week there wasn't really much of anything, and we didn't really see much of anything. As far as the cash market's concerned, you did get back up the weekly res. Yesterday you rejected that, but what are we going to do today? That's the question. Well, as of right now, because we're looking at the futures, we know we're going to gap up unless they fade that move soon. We're going to see a gap up here on the cash market. And if you look back 19 days, now 20, all the way to here, to this day, every single day except for non-farm payrolls, you have gapped up on the cash market, an up gap. Even though like here, we gapped up, we faded all day, but the gap up happened. Gap up, gap up. It's been every day except for this day right here. You have gapped up. Even yesterday. Oh wait, no, yesterday was not a gap up. Yeah, it was, wasn't it? Oh, it was so close. We closed at 89.44. We opened at 89.67. So even yesterday. So now 19 out of the last 20 sessions have been gap ups. And this morning will almost positively be a gap up as well. So here's your futures. So anywhere above this is going to be a gap up. It just shows you how strong the markets have been. So even though they've been fading the New York sessions, your Asian and London sessions have been being bought up, been gapped up. Except for this day right here, and that was non-farm payrolls. It was a travesty, but we did expect it to go back up. Anytime you're in a bullish market, we always want to be a buyer on the S&P when you have 3, 5, and 10% corrections. 3%, buy it. 5%, buy it. 10%, buy it. That stat is a fantastic stat. We have also already had a bear market this year. So the likelihood of us having another bear market this year is so low as far as probabilities go, right? Not using the macro, not using anything, just using sheer coin flip probabilistics. You've already gotten a bear market this year. So those are buying opportunities, those pullbacks. Getting back over here to the crypto world, as that's where we like to operate. Oh, and we also have a short on gold via GLD. You can go look at that real quick, as we did finally roll over yesterday. But you can see it's bouncing again here today. So I don't know what's going on with that. Did we get a down move on the dollar? Of course we did. Big down move on the dollar. What did Bitcoin do? Did it like the news? It did. All right. So Bitcoin here is keeping some of your alts, not all of them. Well, they've basically all turned green now, except for STG. It's still red. And that's it. The rest of them are green. All of them. Jasmine's the one that we're watching, though. And you can see here, it is not rolling over yet. Let's see what we look like with the volume point of control. It's up here on the highs. We've been up here on the highs for the last 2 days. Your point of control is migrating higher. That's typically not a bearish signal. Typically not a bearish signal. These are all buys that have been triggered up here from shorts getting stops triggered. That's why there's literally no sell in there. But eventually there will be. This can also help it roll over. There is definitely selling in there. If you go down on the 1 minute, you'll see it. Yeah, you can see them coming in there. So we want to see this thing fade from this area, because we do have a short trade on it. We're also short bonk currently. Short bonk. It's a meme token. There is ETF news out, but if that ETF news, I've been saying this since it's been going up, and it hasn't happened yet, but if they decline it as an ETF, we are expecting it to give back most of July's gains. Here's July. You can see it closed right on the midpoint, so it's not weak. Actually, it closed just under it, so it is a little bit weaker, but still closed up. The right there is like literally going to be your resistance for bonk moving forward. Or you could watch daily supply. It's going to be right there on that midpoint. So you can be a seller on bonk all the way up to 27, 28. It doesn't look good as being a seller up there, as you'll be above your August volume weighted average price, and you'll be back above the weekly volume weighted average price. So I wouldn't love a short up there, but your 21 exponential is also there. There's quite a bit of confluence up there for potential shorts on bonk moving forward into the week. That is if it's a short. Could it run lower like this and then get bullish for the rest of the month? Absolutely, guys. Depends on what the rest of the markets do. If they're all bullish, then meme tokens can get bullish as well. Or stay bullish, some of them. Pingu's my favorite because it's clearly the strongest one. It also moves really, really fast. This is not a rejection. I'm not seeing like a big rejection. That's what I would like to see. Not seeing that. It's actually basing up here. That's not really great. Not really great news for the shorts, but we'll see what it does. Fartcoins, haha, for Fartcoin's sake, you are on a roll. And hello, everyone. What's up, King Money? How you doing, my friend? Yeah, we've been doing okay. We've closed. I mean, we've had green closing weeks every week since we've been doing the live streams like almost every day. We haven't had a red week yet, so we're doing all right. We're doing all right. Ethereum is, so like you can see how the 1 minute chart here, the structure on Ethereum looks very similar to what Jasmy's doing. That actually is more bullish than bearish for the near term. It doesn't mean that it won't fall away sometime here in the future, but it definitely does not look bearish, as that is a big strong move above the liquidation point. They could come out buying this thing on the open. They're making fresh yearly highs. You've been making fresh yearly highs since last week. Wait, no. Friday, Sunday, Saturday. So since Saturday, which that is last week. Sunday starts a new week, but still. I mean, this thing is freaking ripping. It's not bearish at all. We typically want to be short the weaker assets, not the strong ones. And I thought Jasmy was a meme token. It is not. It does have utility. Over in Japan, it's a way to, like, it's got something to do with personal data. It does have utility. If you're going to buy cryptos, I would buy the ones that have utility, ones that have a use case, not the memes. I get long the memes just when they're bullish, because I want to participate in the volatility, not because I like it and think it's going higher. I don't. I think all of them are garbage. So if you want to invest in crypto, please invest in something that has a use case, something that is investable. So if gold continues to roll over, my bias on risk will be bullish today, especially since we're almost making fresh lows on the week for the VIX. You are making fresh weekly lows this week, but last week's low is $15.18. We're currently at $15.26. So anything under $15.17 on the VIX is a trending up market. I kind of thought this week we'd see a pullback on the risk markets based specifically on the fact that it's been a gap up every day for the last 19 to 20 sessions. Like, you almost need a pullback, gap down. But these markets can go up forever. They never have to dip. It's difficult to time it. We're looking at the daily chart on Jasmy, and we're looking at it pulled away from those highs. That's a good sign. But we need to see it continue. Clearly, there's a 200 exponential moving average up there. Yesterday's high, daily supply. There is some confluence, but I want to see it get back under the weekly volume weighted average price for sure. Way up here, it doesn't look good. Right here's the weekly volume weighted average price. So people will be buying any pullbacks to this area. There's 1 minute left on this candle. It is a 30-minute candle. A close above the midpoint of that 30-minute candle would be more strong than weak. Let's see what it does here in 1 minute. Risk pulling off just a little bit, nothing major. Here it is. I mean, it's just pulling back a little bit. These are 15-minute candles. This is the ES intraday chart. This is your ES daily chart. I mean, it's above everything. It's above everything. We just had a new monthly open, so there's your monthly VWAP. You can see you're trading at the top edge of the volatility bands. That's more of a bullish signal than a bearish signal when you just grind the upper edge of the volatility band. And like I said, that's a monthly VWAP. It just kind of acts as support like it did here last month. And then the yellow is the bottom edge of that VWAP, volatility band. I'm not seeing the 21 exponential moving average, which is odd because I know I have it on there. It's right there. It's right in where the VWAP is. So we got 9 o'clock and we did close back at the midpoint of that 30-minute candle. Right on it. So, yeah, it doesn't really give us much of a signal. It just tells us that it's not weak. Not yet. But we know that they will sometimes fade the CPI news at the market open. We'll see if they fade it or not. If they don't fade it, then us looking for shorts is probably the wrong trade today. Yeah, gold is still pushing. I'm wondering what's going on with that. I mean, the only thing that I can say for the gold is the weak dollar is helping gold to stay strong. I was sitting in, let's pull up GLD real fast because this is where I got this on watch on the top screen. That's oil. Oil's been bearish. There's GLD right there. So I want to see the July open hold as resistance. There's the 200 exponential is down here. That's what's causing support on the 4-hour chart. But this was a fake breakout to the upside. Then we rolled over. Then we broke out to the downside. So we were looking for a sell at resistance. But there was so much momentum going into that level, I didn't love the sell. But I went ahead and took it via buying puts. I did a put spread, a long put spread. And 303 is the sold or the short put. So basically it's like from 309 to 303 is that spread. That's where I make max profit down in this area. So obviously I want to see it roll over. If it gets back up into this area up in here, then I'm going to close the trade because it's clearly not breaking down. If gold does break down, I think that can help risk markets stay bullish as people are taking profits on gold, potentially rotating capitals into riskier assets. That's the whole thinking on gold. Why look for gold shorts when dollar is weak? I get it. It's not the smartest trade, but we're looking for the dollar to actually firm up a bit as it did test July's midpoint and found support. So we're looking for it to slowly grind its way back up to August open or the June highs. This is a scam wick. It is not real. It did not actually happen. So we do have a near-term slightly bullish bias on the dollar, long-term bearish bias on the dollar. Rate cuts is more bearish than bullish for the dollar. We don't know how much of those rate cuts have already been priced into the dollar because the dollar has been bearish all year long, right? There's your yearly open. You set a yearly high, a lower high, and then we broke down. So we had a bearish bias on the dollar all year. We still do have a longer term bearish bias on the dollar. It's just we're right into an area of potential support. So when we come into these areas, we don't expect the dollar to just melt for the month of August. We're not getting rate cuts until September, and that'll be midway through September. Depending on the rate cut, whether it's a 25 basis point cut or a 50 basis point cut, will determine what happens to the dollar. If it's a 25 basis point rate cut, then the dollar could stay choppy or in a monthly sideways range for all the way until December, where the next rate cut would be expected. Then we could see the dollar potentially give up some of those gains that it got in the month of July. Yeah, so we have a near-term slight, very near-term, and I mean just this week, near-term, slight bullish bias. We've already taken out last week's high, but that's that scam wick, so I can't rely on that. Where's last week's high? I wish they would delete that wick. Oh yeah, we've not come anywhere near last week's high yet. Nowhere near it. So yeah, we think the dollar should be able to find a little bit of support here. So we could technically look to short the euro. But I'm gonna wait until 9:30 and see if we get a push up on the euro first. If we do push up on the euro, then we'll look for a euro dollar short today also. So we need this to push up a little bit. Now the euro is not exactly like the dollar. It trades about 60% against the DXY basket. So you can see you are above where we would expect resistance to come into play here on the euro. But look where you rejected, right at the 786. That is where we no longer have a bearish bias on the euro. If we're above one spot 16893, then that's threatening July's open. So we will no longer have a bearish bias on it. But as long as it's below this, we have a near-term bearish bias on the euro. It's currently at an area of support. So we want to look for shorts up in this area as high as here. But if we reject right here at 9:30 at the open of the New York session, we can absolutely look for shorts. So we'll keep euro on watch. Jasmine still chopping around. Come on, euro, don't sell off. I don't want to miss that move. This actually looks good. If it continues to be weak like this, then obviously I think we're probably maybe right on the Jasmine trade. But I don't like that because we closed at the midpoint. So this looks like a support test. Few things need to happen for me to really love my biases this morning. So nobody's chatting this morning, huh? All right. Nvidia has given back all of the gains that it got from the CPI spike. So Nvidia has given it all back. So right here, It's a 30-minute chart, so that's your 8:30 candle right there. That's your new spike. You've given it all back. That's why you're seeing this pull back a little bit here on the ES intraday and NQ intraday charts. So they're already fading it. Now we just need them to fade Jasmine. But dominance is bouncing a little bit here. But if dominance stays weak, and we do think it will, as long as it's below 60.83%, we think it will remain weak. That could hurt the Jasmine and Ethereum LTC shorts. Because Litecoin is bullish too a little bit yesterday. There were some members inside the Discord that did take the short on. We were looking for shorts at 127 on Litecoin. It tested it here at 9:30 at the open. It rolled over, came back, and then ultimately it held. So those guys that shorted Litecoin yesterday, they made money if they stayed in it. If they got rid of it right here, they got rid of it too soon. Too soon. But ultimately it found support here. There is a 4-hour support zone since all the way back here on August the 6th. So you've really not been able to close 4-hour candles under that spot. And weak dominance can keep a bid under this. As far as our others chart, which this is everything except the top 10. You can see the top 10 have been excluded. This is bullish. It's trying to break out. Now here's the thing. This is a new spike. We don't know if they'll fade it or not. VIX did not make fresh lows. And then here's your total chart. This is just excluding Bitcoin. So this has everything, every crypto, even stable coins. So that's why I like the others chart. It excludes like Tether, Bitcoin, Ethereum. It excludes the top 10 crypto market caps. I think it's a better chart to look at for alts than the total. But you can look at both of them. This looks okay. It looks good. It looks constructive. It looks like you're basing up. Basing up at the highs. That's usually a good sign. Jasmine pushing right back up again. Look at our volume point of control, the profile. It's been migrating higher and higher. So if it breaks out, it can run. Does anybody have when Bitcoin rocket? Probably pretty damn soon. If it's going to happen, I would like to see it happen pretty damn soon. But I know this chart is so busy. We can get rid of a few things here. Let's get rid of that. Fib extension, we don't need that. We really don't need this trend line either. We got support here. We know that support. We don't need that. You're trying to work on an 8-hour bullish engulfing at support. This looks like a rejection, but in a bull market, all pullbacks are buying opportunities. It's not a huge move on Bitcoin. From wick high to wick low, it's a 3.5% correction. It's a buying opportunity. You're well above the weekly supply zone, which was acting as resistance last week. Coming into finding support ahead of that is more strong than it is weak, but it's working on that support right now. So I guess I don't love it as long as you're below the weekly volume weighted average price, but this, like I said, this could just be setting the weekly low. Today is Tuesday, and we know that on Tuesdays you can set the weekly high or the weekly low 22% of the time. That's not, doesn't happen all the time, but it does happen often. Often enough to know that you could have your weekly low in right now. So just watch that point. Right there is the open of the week. So that is your weekly low. If you're making fresh lower lows beyond that point, $18,000, then you have to be careful, as you're not done yet making weekly low. But if you fail to trade back down here for the rest of this week, I would be a buyer on Bitcoin, not a seller. You could short 4-hour res here, and then the weekly VWAP is up there at 120. Those are the only two places that if I was going to be a seller on Bitcoin, that's where I would do it. Those are the only two places. But we just have to see what the markets do here when they open in 15 minutes. If they buy this intraday dip, then they like the CPI news. But yeah, Bitcoin does look like it's trying to rocket now. It's making higher highs and higher lows. And it has been since here. It's clearly bullish. It's moving up. Your momentum is still above the 50 on the 4-hour. Momentum is still above it's right there. So I'm sure people are selling this today. They sold it the last time we checked the 60 on the 8-hour RSI. They didn't get downside continuation though, but they were there. Profit taking. Or are we going to see more profit taking ahead of the level because we're not testing it just yet? We'll see. But the news we got today is better for rate cuts. Madge reporting for duty. Welcome back. Lock and load. Jasmine's pushing up to fresh highs. So I'm out of that for now. Out of that for now. As I don't want to get caught in a breakout here. We've already liquidated. That's a higher 5-minute close. And you're getting upside continuation. Here's your highest close right here. This one's higher. And this candle's pushing. So you got to be very careful shorting this. This is bullish structure, not bearish. Might not be short. It might end up being a short. What do we got? We got an hour and 41 minutes left on this 3-hour candle. The only reason I'm looking at the 3-hour candle is because it's showing you these freaking wicks these short sellers, they have been liquidated more than likely on that push. And a deeper push or a higher push will liquidate the bigger shorts. And that could absolutely have us looking at a 1794 area. But a rejection here, I still like it lower. I just don't want to set in it while it's figuring out what it wants to do. Definitely looks bullish. Sellers could not push it down to make a lower low on a 30-minute chart. And that's your August VWAP. So it looks like the buyers are winning this battle. There's a measured move to take on this. It's a little bit large there. Let's go midpoint-ish. So 1800 if the bulls get their way. So if your stop is anywhere under that, you're being threatened, baby. They're threatening you. And the moving average structure is bullish too. You're above everything. Yellow, blue, purple, green. So they're all right now. Your yellow, your 21, your faster moving average is just broken back above the 50. I don't know if they'll be able to hold it though. We know they're selling this. We can see it on the volume profile. Big spike in volume here. But what we're not seeing is a spike in volume up here. You've got Apple and Microsoft both testing intraday VWAP from above. And you got daily res on the ES futures setting at 64.29-ish. What's Bonk and Pingu doing today? Pushing up along with everything. But they still look bad. So I'm going to keep my short on Bonk. I'm going to keep that open because the structure of it looks good. The point of controls are migrating lower. You're above both the monthly and weekly volume weighted average price. So it might want to spike back up to the weekly open. My positioning is right up there, right above the weekly open in this area. So if it rejects here later on in the week or today, I doubt you'll get up there today, but if you do, if you get up there today, then something else is probably going on because you would need to see a pretty big expansion to get back up here. But if it takes like 2 or 3 days to get back up to there, I will add to that short position. I will add to it. So you got a higher close still on the 5 minute. Not great. 8 minutes till the open. Do you think we can continue to rely on the Fed for long-term bias? Listening to them in early 2022 was on the money. Listening to the Fed since 2008 has been on the money. I think you can. I think the Fed is hugely, they tell you what they're going to do, right? If they're lowering interest rates, that's typically bullish. For smaller companies too, you know what I mean? The small companies are the ones that struggle when you have a high interest rate environment. Lower interest rates is good for growth. So yeah, I believe the Fed still has a lot of power in these markets. Now, the real question we have to ask ourselves is, when are they going to stop doing this? Because they never did what they do now before 2008. So before 2008, the Fed kept interest rate policy a secret. Traders used to basically take trades based on the size of the Fed's briefcase. Whether or not, if it was a heavy report or a small report, like things like that. It wasn't until the GFC that the Fed started actually forecasting what they were going to do to the rest of the world, because they wanted to essentially put a floor in the market. They wanted it to stop crashing. So they give you what they're going to do in advance, a few months in advance. They give the markets time to digest their information and then make decisions. So if the Fed ever stops forecasting, then yeah, it'll be more difficult. But as long as they're forecasting, yeah, you should listen to the Fed for sure. They're clearly trying to keep things going up, right? They know that it's good for the economy, good for the world if the 401ks are still working for people. When that stops, this whole system is done. Then it doesn't really matter, right? It won't matter anymore. Even shorting everything wouldn't matter, because the money that you're using to short them isn't going to be worth anything. You can make $50 billion of useless dollars. They're still just toilet paper. And not even good for that, because they're rough and crinkly. Fire starter is what it's good for if the system collapsed. So yeah, you still got to listen to the Fed for sure. You definitely need to take into account what they're planning to do for future market outlooks. You need to keep this on watch up top. S&P is testing its weekly open right now, so it can absolutely find support here. We're getting ready to come into the open, so I want to see what it does at the open. But that might be an opportunity to get calls for the rest of the week. Dominance still making or pushing into lows. Fresh daily lows on dominance. That's going to help Jasmine and Ethereum stay bullish. We might be wrong on the short bias based on that data. On Jasmine. Jasmine is the only one that we had a short bias on. And Bonk, of course, but that was yesterday. There's not a short setup on Bonk right now. It's just too far away from all of the stuff that matters. Like this stuff up in here. This is where we would expect resistance. Down here, not. The only thing you really have is going to be really fast moving averages and like intraday candle closures. Your 200 exponentials all the way up here. 100, which is a pretty good indication of trend, or at least for the near-term trend, way up here. So we know it can go up there. That's why we don't necessarily want to take fresh shorts way down here. Plus, if I did that, that would offset my cost basis and put it way down here, putting me in harm's way. As long as my short is up here, I'm not really in harm's way that much. But it's unrealized gains anyway. I've already taken profits on the trade. I could shave another, $100 off of it, but at that point my position would be so small there wouldn't even be any use holding it. So if I was going to do that, I would just close the whole position and look for a new entry, which we might do if the dominance continues to push on fresh day lows. We definitely do not want to be holding all right, so now what we do now, that's what we want to see. Weekly open holding as support. Bitcoin is testing daily res right now. Apple is bullish. Microsoft fresh daily highs. Tesla's pushing down. Tesla's into resistance, near-term resistance. The June open. You can see yesterday we broke out of the trend line, so there is a larger move on Tesla potentially coming. You guys need to be prepared to buy dips on Tesla. If this breakout's legit, there's a large measured move on Tesla. A large measured move. It didn't break down. It failed to break down. So you're looking at a year open test on Tesla if support holds here. 388. I don't know how long it'll take for that to happen. But yeah, this is what I'm looking for on Tesla. If this breakout holds, if we get back under these trend lines down in this gap area, then I'm not liking the breakout to the upside. But if the breakout holds today, could be seeing people buy it up. All right, I'm going to try one more time on the short on Jasmine. This is the last attempt on it. Like I said, I don't want to give back those gains. Last attempt. If we lose it here, we're going to get rid of it. Everything is up. We want to see it start to fade away from this area now that the market's open. If it continues to put in higher closes on a 5-minute candle basis, we're going to get out. Really need to see it start closing candles back under 17, 18, and then I want to see that area hold as resistance moving forward. But right now, getting short on the bell might not be a good idea. You could wait 10 to 15 minutes. See what kind of reaction happens here. If it continues to push up, we don't want to be short. Nvidia is pushing down pretty hard at the bell. Or on the bell. So that could have an effect on risk here. Let's see if it finds support down here. You're at the bottom edge of the daily volume volatility bands. So we want to see resistance hold on Nvidia at 182.64 for the NQ and ES to roll over. We don't have a bearish bias on these things. We have a bullish bias. Apple is pushing, or just made fresh daily highs. It took out yesterday's high. And then Microsoft falling off from the daily high. Tesla still pushing a little bit. but your risk assets are pushing. Look at your advanced decline line. So this is the 100 biggest stocks are bullish. Now this thing has been opening on highs and selling off, but now that everybody's got such a bearish bias out there, if they rally, you're going to see a massive move today. You're going to see fresh all-time highs on the ES and fresh all-time highs on the NQ. Not a good day to be looking for shorts across the market. But as far as shorts go on alts, we'll see. We'll see. Dominance is at 0.72% and bouncing a little bit here. That weekly open test on the ES would have been a good trade if you would have bought spot futures. You're up 15 points. If you did buy weekly open test on the futures, take profits. I didn't get filled on the calls. Gold GLD is still a doji on the 4-hour, and you just pushed in down to fresh 2-day lows on the VIX. All of that's bullish. The cash market was another gap up, and you just took out yesterday's highs on the SPX. Yesterday's highs are smoked. You're well above yesterday's highs. So anybody that shorted yesterday in the cash market, they're stuck. Here's that weekly open test I was talking about. I just didn't get filled on the calls. That would have been a decent little trade. I only look for 10 points on the ES futures. Like I said, that's a 15-point move. So if you got filled right there, you need to be taking profits. And then here's your VIX pushing on fresh daily and 2-day lows. But the cheap VIX, it's cheap as been since July anyways. And Jasmy is not pushing down. It is not rejecting. All right, Tesla's rejecting a little bit harder. The Nvidia is going to bounce, but it's at the bottom edge of the volatility bands. But we want to see Jasmy start to puke here. It's going to be a down day. We want it to start puking now. The only reason that we're looking for a short on Jasmy is because the meme tokens got destroyed yesterday. Meme tokens, Pingu, Fartcoin, Bonk, all of those got absolutely hammered yesterday. Pingu is the strongest of the three, as it's still above its yearly opening range. So Pingu could potentially still be a buy. As long as it's closing dailies above the 21 exponential moving average, I would be a buyer at support on Pingu. Ethereum is breaking out right now. Like, this looks bullish. So Jasmy could be getting bid support from Ethereum. Ethereum looks like it's ready to rock and roll. But it did that yesterday too. Ethereum did, and it rejected. So the sellers could literally be stuck. If the sellers are stuck, then you'll see a gigantic breakout today. We want Jasmy back under this, because back under the weekly VWAP, it's weaker than it is strong. There's still a lot of time left on this 3-hour candle. These 3-hour wicks are disgusting. So each time Jasmy's been up here, it's been sold. A close above these wicks on this 3-hour candle, I would no longer be bearish. I would absolutely be looking for a move up into here today. because of all these stuck shorts. If it starts to puke here in the next 20-30 minutes, that would be, you know, a decent signal to look for shorts. You're not getting that yet. Nvidia bouncing pretty hard off of that bottom volatility band. Microsoft pushing into fresh day highs. Tesla also hitting the bottom volatility band. So could we put on a long on Tesla today? Let's see if we could buy an out of the money, a cheap out of the money 1 day option on Tesla. I don't think you're gonna find it. You don't have any 1 days. You got 3 days. Let's go look at Tesla real quick while we're waiting for Jasmine to make its mind up. Which it looks like it wants to go higher. $340. Oh. Let's see. Where could we get today? Very, very top edge. Be 350. Those are still super expensive for a 3-day risk. We could lighten that load by buying the 350 and selling the 365s. That would give us about a $250 risk on Tesla. That's still quite a bit of risk for me on a 3-day trade. Maybe if it was going to be like a 2-week trade, I could take that risk, because I know that the chances of it getting up to 350 in 2 weeks is a lot higher than it getting to 350 today, right? But I like it. Anything under like 340 and up, I like it higher. Let's see what we can do on a 17-day. We bought the 350s. Oh, wait, no way. Tesla's expensive. It's too much risk. Too much risk. If you were going to do the Tesla trade, just make sure you can handle that risk. The implied vol is going up the higher you go. So that's not great for looking for call spreads. You could only look for like a $10 wide spread or something. And you're still going to be risking, on a $10 wide spread, you're still going to be risking $250. But you could put on something like that around support. It would be like something like this. You'd be buying the 347 17 days out, and you'd be selling the 355s. So in a sense, you're buying 347 up here, and you're selling the 355s up here. So can price get up there in 17 days? If it doesn't, you'll lose $250. If it does, you can make up to $400. That's if support holds down here. This is where I want to see support hold today. If it continues to make fresh daily lows, then I'm not a buyer, because this will be looking more like a rejection than a breakout, right? Because you broke out yesterday. So I need support to hold at 338 to be a buyer on Tesla. If you want to buy Tesla long term for like looking for long term growth, 5-10 years down the road, 330 is cheap in my opinion. They just launched the ride sharing service in Texas. Once it starts doing good, they'll start doing it in more and more cities, and eventually, depending on revenue, Tesla may stop being a car manufacturer and selling cars to the public. They may just become a ride-sharing company. And the amount of the profits on are like $50K per car per year. So why sell a car for $50K when you can make $50K in 1 year on it, right? That's the thinking behind long-term Tesla longs. Is they'll eventually just be a ride-sharing network and a robot selling company and everything else they do. They sell sun panels, and Tesla's a good company. I think 10 years Tesla will be worth way more than $330 a share. That's just my opinion. A new Trump Fed chairman is also worth considering. Orange man-like market go up, dollar down. Yes, absolutely, Madge. I agree. That JPY short in 2022 was fire. Yes, it was. I made a lot of money on that trade. Lots of money. That trade, I took that short. It moved down almost like 800 pips in 2 days. That was a fantastic short. But it was against trend. It was a trend reversal trade. The trend was up, and I took a short on it. I took a short on it because of I figured the BOJ was going to intervene, and they did, and it worked. But ultimately, it found support and rallied and closed that short out. But the short did make a lot of money. I was able to take profits on that trade 3 times before it found a bottom. It was a good trade. This year, it's trending lower, so we want to see that continue. The problem is the JPY is weak. It's not gaining strength. We need to see the JPY gain strength, or at least dollar weaken against the yen. So I am looking for this to continue. Long-term, end-of-year target on USD JPY is like 138 to 135 down in here. We'll see if it gets there or not. Right now, it's still in a 4-month range, and it just rejected April's highs. That's all we got right now. I'm going to hold it. Unless we start closing dailies back up in this supply zone, then I'll close it. I'll look for that trade for dollar weakness elsewhere. I can look for dollar weakness on something like pound USD, Aussie USD. There's so many different places where we can look for dollar weakness. Now, on most of those, you've already seen huge gains on the year. So there's pound Aussie. There's pound dollar. So you've already seen pretty significant gains on the year, but we'll see. All right, going back over here to Jasmine, that's the one we are looking at. It is not really rolling over here. Not really rolling over. What's risk markets doing? Risk markets pushed up and rejected. Dominance still pushing up a little bit, but I still have a downside bias on dominance. Bitcoin is currently rejecting daily res, but at any point it could absolutely get it back. Believe yesterday's low. There's your daily res. It's this high day close over here. That's what's holding as resistance. That's your high day close. It's just the highest close in the daily candle. The highest daily closing price ever on Bitcoin is up there. That's your near-term resistance. And then your very near-term resistance would be that daily res. So that's what's causing it to struggle here. Bitcoin going down, dominance going up will help the Jasmy short. Now we're starting to see a little bit of pukage. This is what we want to see. Now that we've gotten that 5-minute closure back under 1718, we want to see that hold. Tesla just broke under support. 337.40 and pushing lower. Nvidia is making fresh daily lows. Apple rejected daily highs. So did MSFT, Microsoft. Will it continue? GLD pushing back up. I want to see GLD reject this area to keep a bullish risk on bias. I'm sure some people have taken GLD shorts. This is what's holding support. Your 200 exponential. We hope the July open will hold as resistance. We have a 303 target on GLD. You are under your weekly open on risk markets. So risk markets pushing down might help the Jasmy short. Bitcoin's got 2 hours left on this 4-hour candle. The last session you closed under the 4-hour 21 exponential. Jasmy bouncing again. Start puking, please. Oh, am I even in it? Yeah, okay. For a second there, I thought I might have not been in it. Bonk. Giving that back. So that trade also looking good. Pingu giving some of it back. It's still early on the session. Nvidia is pushing pretty damn hard. Nvidia is looking for pre-market lows at 180.42. Their pre-market lows at 180.42 on Nvidia. And your advanced decline line has pushed away from the $1,300 area, or it's not dollars, it's just 1,300. You're pushing down into the 950s, and the market watch is still green. It is still more green than red. So yeah, if you're short risk markets, you want to see this change hues. Let's go look at the index watch and see what the S&P 100 are doing for now. Still very much structured bullish. You got 73 advancing, 29 declining. Salesforce is pretty big. It's your biggest down mover inside the S&P 100. And Amazon, which is a long trade that we're in, is pushing down. So it's losing that yearly opening range. I don't love that. I am holding a long trade on Amazon. I want to see it hold support. July open would be a good spot. I'll get rid of the trade if we lose the August open, because we're long down here. We bought it on this day. When we were getting back above this swing low, we bought it. We bought it pretty early in the session too, so we're probably long from like 213-ish. If we lose that, I'll just bail. I'll take whatever profits I have at that point and get out. Apple still looks really good, but I mean, Apple needs to pull back before I can partake in it. I'm glad that it broke out though. It's broken out of a longer term range. So here's your breakout point. So we can get rid of the Jan 2025 low. Let's get rid of the May high. May high doesn't matter. May open doesn't matter. July open does. We'll move this up to Aug open because that will matter moving forward. May's low, no longer irrelevant. This, very relevant. April's high. That's your breakout point. You're no longer in a 4-month range. 1, 2, 3, 4, 5-month range. As long as you're above this, you're out of that range. So this is your breakout point. So that's going to be a very important level moving forward on Apple. Can it hold the breakout or does it fade back into the range? If it fades back into the range, then we can be sellers from here, targeting this area. But as long as we're above this, we have a very bullish bias, longer term. Microsoft has just been bullish. I mean, it was making fresh all-time highs. Had earnings, gapped up, sold off, been selling off ever since. But it's finding support around the 21 exponential. And then Nvidia looks worse on an intraday basis than it truly is. Like, not that bad. Jasmine pushing right back up. We want to see this hold. Madge also said, that's not technicals, and this channel is about technicals. Well, I'm trying to teach you guys of what technicals to look at, and then, yeah, I rely mostly on technicals, but for my long-term bias, clearly what's happening in the macro matters, right? It really matters. Is inflation going up? Is jobs, unemployment going up? Like, those things matter. They do, because they're going to dictate what the Fed does. But yeah, mostly technicals. Because we use the technicals to manage our risk from. Like, we can know everything about the macro. That doesn't really give us an area to manage risk from. Technicals is that. So technicals does not predict what price will do. It just tells you where it's been, right? Where it's been, what it has done. What technicals allow us to do is find opportunistic areas to put risk on. That's what technicals are for. Took that long on 200 EMA of the BTC retest, says King Money. Happy for now. Let's see if they fade it, but stop loss at entry, so not very big chance to lose this trade. There's no chance to lose on that trade if you've got your stop at break even. Now, what you can lose is the unrealized P&L. You can lose all of your unrealized, and if you bought that 200 EMA test on the daily, you're sitting in a nice chunk of change. You didn't tell me what time frame you bought the 200 EMA. But yeah, if you bought this, you're going to lose a lot of unrealized gains if it goes all the way back to break even. That's probably not what you're referring to. I don't know. You didn't give me a time zone, a time frame. Oh, if you're talking about today on the 30-minute, maybe, then yeah, it's just a day trade, right? That's the best way to do it. That is the best way to do it. You take a risk, try to avoid losing money. Once price trades away from your entry, throw that stop out there because you don't want to. You want to minimize your losses. That's what we're doing as a trader. We're not predicting price at all. We're managing our losing trades, making them small. So like if I lose twice on Jasmine, I lose $30 each time. That's $60 I lost. If I'm right on the trade and it rolls over, I'll make much more than $60. It's that simple. If it goes up and stops me out again, I will have lost $90. But as far as on the week goes, I'm still green because I made 225 yesterday plus 90. I'm up about $150 on the week, right? It's not life-changing money, but it gives me room to make more trades. I got room. So I can look for a trade on another asset and see if I'm right or wrong. That's all I can do. I cannot tell you what price will do ever. And I don't try to. You know what I mean? I try to tell you what I think, you know, the bias is and what the sentiment is. That's it. Right now, there's heavy sell-side sentiment out there. Heavy sell-side sentiment. You got people wanting the system to collapse. You've got all these sell-side, you know, traders out there. They think that, you know, that Trump is garbage. They want to short the markets, right? But you do better when you follow sentiment. Right now, sentiment is very bullish. It's not bearish. You're in a rate cutting environment. There's so many reasons to be bullish to markets right now. Just with looking at Bitcoin ETF inflows and outflows, like there was a period there at the end of July 31, August 1, August 4, where you've seen pretty heavy outflows, right? If you just go back and look at Bitcoin on those days, right here, July 31, you've seen heavier outflows on this day, and then small outflows this day. Every day since, you've seen inflows. Now, this data is lagged by 1 day. I can only see the what happened yesterday. I can't see what happened today. Today's the 12th. I won't know till the end of the day what happens. Right? But if I'm seeing, you know, the sentiment is more bullish than bearish, then I want to keep that. Also, we're seeing an uptick on daily exchange volumes. That's what we want to see for breakouts, for bullish continuation. Now, super heavy volumes, not what we want to see, because heavy volumes could indicate sell side activity. But right now, everything looks okay for growth to continue. I mean, right now on the ES, you're testing Monday's midpoint, yesterday's midpoint. You're not breaking down. This is not super bearish. Not yet. You won't be able to say you're super bearish until you take out Monday's low. So here, I'll blind everything, turn off everything, turn that off, and then just turn on Spaceman here. Go intraday. Pull this out wide so we can see. I don't know why that indicator does that. It scrunches price down, but this is what you have right now. Like, this is a perfect buying op. An absolute perfect buying opportunity. If you expect a week to be bullish for the rest of the week on the S&P, then this would be an area to buy. It's Monday's midpoint. So we could go ahead and throw on some risk. Let's get rid of those Tesla calls, because I'm not going to take that trade. Not with it looking weak like it is today. I want to see Tesla hold support. It might have already found support for all I know. No, it's still pushing. Tesla's still pushing. Let's give it a minute first. Let's see what happens with Nvidia and Tesla, Apple and Microsoft before we buy that. I would have wanted to buy right there anyways. I don't want to buy it up here, because then you're chasing. You have to get ready to buy these levels when it comes into it. But if we lose this area, then you don't necessarily want to be a buyer, because then you're threatening to take out Monday's low. Well, technicals can help you manage risk. That's all they can do for you. They're not going to tell you the direction of the market. Right now, the VIX has already put in fresh lows, 2-day lows. So we want to wait for a resistance on the VIX before we become a buyer. So where would that resistance be? Well, we know 1723 is the year open. So as long as we're below this, we want to be a seller of volatility, right? We don't want to be a buyer vol when we're above that. We don't want to be a seller on vol above the yearly open. We want to be a seller on vol below the yearly open. So we could look to be a seller here, or here, or up here, right? Not down here. You just made fresh 2-day lows. Let it bounce. Let it see what it wants to do. But up in this area would have been a decent little spot, because you're trending lower here on the VIX, which is good. We've had a few spikes, but every time we've gotten those spikes above that yearly open, it has been faded every time. Every time. That is bullish sentiment, because when the VIX spikes, that's a bearish move on the S&P. When it fades, that's a bullish move on the S&P. So as long as you're failing above the yearly open, that's bullish sentiment. So you want to have more of a bullish bias on the near term. The IWM right now has the most heavy sell side out there right now. More people are short the IWM, I think, than ever have been before. What do you think's going to happen once the IWM breaks out above this? You're probably going to see a massive rally on the IWM. Long term, not one day. I'm talking like 5-6 months out. This will probably break out above this. You are going to see a large move up on the IWM based on such heavy sell side pressure. I don't like it to the downside. The rate cuts will help this be bullish. Your shorts won these 2 days here. Anybody that shorted the retest here, they're going to be stuck above the monthly open, or the monthly high, the previous month high. So we're going to have a bullish bias on the IWM above that. We're going to be looking to buy 228, 230, 234 strike calls long term out, like December's. We could probably put that trade on in anticipation of those shorts getting wrecked, right? Today, I could put that on. Let me go out to December. Let's go look at what we got out there while we're waiting to see what happens with the other trades that we're holding. Because, I mean, Jasmine's going back up. It's not failing. The Jasmine needs to fail, and it's failing to fail. Fail, you bastard. Not exiting yet, because it's, like I said, as long as it's closing 5-minute candles under 1718, I still like it to the downside, but risk looks to be on today, not off. So we'll go down to December's on the IWM, and that chart was what? Let me see. Let me get those July, or was it July highs? I believe it was. Yeah, July highs. So 226. So we can be a buyer at 227s. So we can buy 225s. And do what? 230s, 235s, sell those. Now, since we've got 129 days on this trade. That means these options will have value, right? They'll have plenty of value, even if we're wrong. So we won't lose the entire $462 that it will cost to get into this trade. If it starts to reject a yearly open, if it rejects 222s and starts to roll back under, we can exit the trade, like whenever that happens. But we stand to make 540 if we're right. Risk $400 to make 500. Not bad. It's not quite a 2-to-1 risk to reward, but we know we got rate cuts coming, more than likely. And we know that we got the biggest short interest on the IWM that we've ever really seen. So the probabilities are pretty high that we'll see this happen before the end of the year, right? That's why the premium is so expensive, because the options market is saying, yeah, this is a very high probability. This is a high probability. Anything inside this ruler is a high probability of it closing inside of this ruler within this amount of time. So it's a high probable trade. High probable trade. Send it if you want. Boom. I sent it. I'll exit it tomorrow if we reject the yearly opening range. As long as we're trading above the yearly opening range, I will keep that trade open. And I can exit it up here. That's max profit. 235 is max profit. So, yeah, it's a high probable trade. We'll see what happens with it. Let's go back over here to Jasmine, because it is not failing yet. We even got a higher close than that. No, it's right on it. Still, it doesn't look great. GLD's rolling over. That's good. That's what we want to see. And Bitcoin dominance is rolling back over as well. So that might be a good enough reason to just exit this trade. Stop trying to short. I mean, we're holding one short. That's nicely into profit. Let's go look at some other assets real quick. So this is a weekly fib here. Yeah. The Solana could be putting in the weekly low at the midpoint of this candle's range, but we don't really care about that candle's range anymore. Look at where you found your weekly low as of right now. Right here. So you could watch 173.67 for support moving on. And if it holds, you can be a buyer on Solana, just based on looking at the weekly ranges. What did it do for the month of July? It did okay, but it did give back over half of those gains. So your August open is also setting directly under that midpoint. Now we do know that August and September are typically bad months for Bitcoin, right? We see we've closed more red months in August and September than we have up months. So statistically speaking, they have been bad months. But as long as you're holding support on Solana here, I can be a buyer on Solana. Now on the very near term, let's see what it looks like. It doesn't look great. So on the very near term, right here, right now, you got people trying to sell this. They think the trend has changed. They might be right. We don't know. We won't know until the future. But this is a decent area to look for risk. You got your weekly VWAP up here. So as long as you're closing candles below that price, 179, then there is a threat that you are very near term, the trend has been broken. It's a very, very, very near-term trend has been broken. So we would expect to see, a lot of volume in this area. So if you break out above it, you don't want to be short any longer, because now that near-term trend might be resolving back to the upside, which is consistent with the year-long trend. It's also consistent with the month-long trend because you're up on the month. You're objectively bullish on the month as long as you're above 172.18. So watch if you want to short, or even if you want to buy Solana, you will be watching the 100 exponential on a 30-minute basis, as it does a pretty good job of showing you trend direction. But we already know trend direction. We already know it's up on the month. We already know it's up on the year. No, it's down on the year, sorry. We know it's up on the month, down on the year. But it's trying to reclaim that. It tried to reclaim that yearly open and it lost it. So it might be a good short. Solana might be a good short. It had it here, couldn't hold it. Couldn't hold it. This absolutely could be a short. But only time will tell if you're right or not. It's just a good area to put risk on. It's a better area. You would agree that shorting here is much better than trying to short 173, right? So even if you lose this trade, it's still a better trade than shorting the lows. Even if you lose, it's still 100% better trade than trying to sell the lows. Technical analysis just gives you that. That's all. W also rejecting at a potential area of resistance. Jasmine starting to kind of. The more time it spends building in a wedge here, which it is, the worse it looks for the sellers. Because you are wedging. You're just wedging up on a smaller time frame. Now, a breakout from this triangle isn't going to guarantee anything, but price is fractal. What you see happening on the monthlies also happens on the intraday. But intraday trading is so much more difficult because you're prone to get stopped out from intraday chaos. Like a news article can come out and cause this thing to spike randomly. We used to call it random market violence, right? Those big ass wicks. When you're holding a short, you think it's looking great, it's working in your favor, and then a random market violence wick, boom, knocks you out. And then 20 minutes later, it rolls over and your short would have worked. Yeah, that's random market violence. You cannot predict that. So sometimes it's easier to be a swing trader than it is a day trader. Because you're making trading decisions based on a larger time frame. Your stops are going to be wider. It's going to give you more room for your trade idea to pan out. So if you are failing as a day trader, then I suggest you use my strategies and the things that I'm teaching you here and broaden your horizon. Look out in time. Instead of trying to be an intraday scalper, Try to be an intra-week scalper, right? Around the weekly highs and weekly lows. You can couple that with other info, like if you're awake during the London session, you know that a lot of the times the London session calls the day high or day low. If you're trading up around the weekly highs, are you expecting a rejection based on your yearly analysis, based on monthly analysis? If you are, then that's the area to look to put on risk, because you're looking for a broader weekly move, not an intraday move. And you're less likely to get caught by random market violence when you're doing things like that. The tree just hit the ground. I just heard it. Boom. Bye, tree. Litecoin. So far, sellers are holding July's highs. Are those even July's highs? Yep. Yep. So July's highs holding as intraday resistance right now on Litecoin. We liked Litecoin as a sell yesterday at 127. If you're still sitting in that, I think you're okay. If you start closing 30-minute candles above July's highs, then you're going to be threatened. I think I would leave that trade open. I don't think I would be trying to get too cute, because there's too much of a spread between where price is trading right now and your entry. That would massively reduce your cost basis. You don't want to do that, because then you're more prone to getting wicked out by random market violence. So just hold it, see what it does. I don't really have a huge bearish bias on alts right now. As long as dominance is trading under that resistance, which is up here, the trend can resume. The trend is down on dominance. This is your support. We need to know if yesterday did that support flip to resistance. If so, we're expecting downside continuation on dominance. That will help alts. There's a clear channel there, but so it needs to break down under that as well. Totals up on the day, 2.14%. And then total 3 is up on the day, 1.24%. Still looks okay. The broader trend is up and it looks okay. You're seeing a 2-day correction here. It's testing daily res. Ethereum is, you're not seeing much upside continuation from when you got the news spike, but you're not breaking down either. That's what's making Jasmy fail to break down. Ethereum. If Ethereum was to break down, I think Jasmy would also. But we've been sitting in this for quite a while now, and it hasn't broken down. So it is wedging up. It is going to break out of this wedge. I don't know if you'll see continuation on the day's range when it does break out of the wedge, but chances are if it breaks out to the upside, we don't want to be holding the short any longer. 30-minute 200 EMA right under it. What's up, VT? What's happening? BNB USDT. Yeah. It looks good. It looks like Ethereum and Jasmy. And we do know that this, I don't know if I would say it has utility. I mean, it's Binance's coin. Binance makes money. You know what I'm saying? As long as they make money, then their tokens should do okay. It looks really good on the year. Really good. You're trending up at year highs. You're above last year's high. That is all great news for longs. Not new longs today, but year open longs. They're doing great, right? They're holding and they're loving life. So they don't have to do anything. So for you, you're going to be more, that's the wrong kind of line. You're going to be more focused on August's open than anything. Because if you fall under that, then you're threatening August lows. Right? I mean, objectively. If you fall back under here, you will be threatening to run down to here. So as long as you're above that, it can keep going up. Will you see a period of sideways consolidation at some point? Yes, you will. I can't tell you where that will happen, but it will happen. It's already happening. You have been unable to break out above Saturday's high as of yet, but that's only on the very near term. Very near term. If Ethereum breaks out today and continues to trend up, I would assume BNB will too. I would assume BNB will also. So it looks okay. Notice how the buyers picked it up at the 2024 high. You traded up into it and above it on August the 8th and failed. But then the next day they were able to get it above and they were able to push it and it held. Next day they retested that level. The buyers scooped it up. This was a liquidation run yesterday. So if your shorts were going to win the battle, you would expect them to be winning today. They are not. So yesterday was the best case scenario for sellers. Today, not so much. So the cryptos look awesome. They still look bullish. The ones that have utility, that have a use case. Notice that you made a higher low today. That's bullish. You're trending higher. It looks good. You would be a near-term support buyer on BNB until it fails. So the sellers thought they had it today. All morning, the sellers were like, yeah, baby, going to the bank today. And then boom, nope. Bulls have got it. Bulls are defending the trend. As long as those bulls are defending the trend, I think you need to be a support buyer on this asset. You could be a buyer under today's low. You know what I'm saying? Like tomorrow or Thursday. But you need to wait for it to get back up into today's range before you buy it. Don't buy it. Don't buy it. Like if you're looking to buy this price right there, you know you want to be a buyer on a retest. Well, you don't want to buy it if price comes straight down and breaks below it. Then you know you don't want to buy it because the momentum is weak. You need to wait for it to slowly make its way back up into this range, and then you need to see support hold. Then you can be a buyer. Okay? Yeah, I heard it. I heard it hit the ground. Oh no. Well, Bismo's not getting on the roof anymore. It is what it is. So yeah, I mean, I like BNB. It looks good. It looks bullish. Just keep an eye on the near-term bearish momentum. I just got liquidated by 100x Bitcoin. Rizwu, you just got liquidated on 100x BTC. Yeah. Yep. 100x BTC. What would that be? All right, let's pull up Bitcoin. Let's slide that leverage bar up and just see how much room you have on a 100x trade. So this is Bitcoin, the chart of Bitcoin. I'm going to slide the leverage bar up to 100x. Right there. And let's just act like we're going to do something that crazy. We're not going to, but let's just pretend like we want to. Okay, where would our liquidation price be? 109. 109. So if I were to buy this, a push down to 109 would take every dime I have. That's not giving you much room. Now, it is a lot of room, actually, because 109 is way down here. But damn. What were you thinking? Yeah, stop using 100x leverage trades. You're not going to make money doing that. You're only going to give the exchange all your money. You got to stop doing that. 20x is max leverage. 20x, that's max leverage. And that's on small position sizes. You will never make your money back trading with 100x leverage. First and foremost, just taking that trade. Hang on, let me fix that so I don't accidentally do that. There we go. Yeah. You know better than that. That's gambling. I mean, you're just trying to get rich. And it's going to be swing, batter. You know what I mean? Every trade you take is going to be maybe not. And since you're trying to make that money back, you're also going to have to deal with a lot more emotion, right? Because you're trying to make that money you just lost back. So now, every time you get in a trade, you're going to be quicker to take your money off when you're in the right direction instead of letting it play out. Your emotions won't allow you to let it play out because you'll start telling yourself, well, if I don't take money now, I might get stopped out and lose everything again. Yeah, the way you're trading isn't going to pay you in the long run. And I'm sorry about that. It just is what it is. And I don't know why you would have just gotten liquidated on 100x. Trade, it hasn't really moved that much. So you must have taken that trade days ago and you've just been sitting in it, hoping and hoping for it to go down, and it didn't. I don't know. That's crazy. That's not the way to do this. You can gamble and do that, but just make sure you're only gambling small amounts of money, like $100. Like, take all your money out of your account, put it into spot, and then put like $100 in the futures account, then trade with 100x leverage. Because that way you can only lose $100 if you're wrong, instead of getting your whole account busted. Just noteworthy joining the live. Did you take a trade on Tesla breakout yesterday? No, I don't take the breakouts. I take the retests. It's retesting today. It's retesting today. If Tesla can hold 332, I might look for a long later. But as of right now, this is a failed breakout. And remember, this is on a pattern buster. This isn't on the main breakout, right? This is on a pattern. You're trading a subjective pattern by looking at the trend line and calling that a breakout. That is very subjective. Remember, Tesla is trading in May's range, the month of May. You have not broken out of May's high yet. You have not broken out below May's low yet. You are in a 4-month range. This trend line stuff is subjective. So for me, that's not a breakout. It's only a breakout of a subjective pattern. That's all. So for me, this is a failure right now. But if it can hold this area as support, I can still buy it. Because I know this wasn't anything yesterday. This didn't do anything. You got to get up here to objectively be breaking out of the range. Or down here to objectively be breaking down out of the range. This is where it needs to hold support for me to target this price. I don't care about these trend lines. I only put them on the chart for you guys. You guys that like to do the pattern trades. The Elliott wave traders, those kind of people. Like those are your pattern traders, right? They're trading this pattern. I'm not. I'm trading May's range. That's what's making my trading decisions. So no, I have not bought it yet. I can buy it as long as it holds this down here, but for an intraday scalp, I can buy it as long as it's holding this. So where's your daily 21? That's the best place to look to put on risk. That's already happened. So we don't expect it to come all the way back to this, right? So we would fib this from here to here, and we would say we can be a buyer all the way back down to here. And then after that, we can't. But as long as, you know, there's still room for me to keep a bullish bias here on Tesla. But for a day trade, I need to see it hold the 30-minute 100. And you're really not. You're not in a trend here. You're still in a very much in a range. Let me get rid of these so you can see it, like, for what it really truly is. This is your range. So that's your true range that Tesla needs to break out of before you can call it a breakout. You're in a 4-month consolidation here. So when you get rid of the trend lines, you start to see what it really is, right? Yeah, the trend lines are very subjective, guys. Very subjective. You're going to there's too many ways to draw them. If you use the daily, you're going to get different lines than if you use the 4-hour. Because the 4-hour, you're seeing pre and post market data. On the daily chart, you're not seeing pre and post market data. So there's subjectivity right there. Also, the other thing that makes trend lines subjective is between all the different charts that people look at. Some people look at candlesticks, some people look at bars. A lot of your big money managers look at lines. They don't look at candlesticks. They look at the line charts. Right? They might be looking at an area graph. They might be looking at something like this. They might be looking at, who knows? There's just so much subjectivity in those trend lines. We know that moving averages do not help us in a range. We know that. But as far as our trend trading rules go, as long as you're closing dailies above the 21 exponential, you can have a near-term bullish bias. Today's a pullback, that is all. It's a pullback. It's spooking all of these people that bought yesterday expecting the breakout to hold. Not really a breakout though. Just be careful when using that kind of stuff. That's why I had 2 different trend lines up here. That's for price. This is for the line chart. Right? I mean, you broke out a long time ago. If you look at the line chart, you broke out here. So that's where they want to see it hold. I probably didn't have the line chart triangle drawn. I probably had a 4-hour or something. Yeah, that's probably what it was. Because I can already see a difference. Yeah, we'll just keep it like that for now. Yeah, it's got some work to do. It's still in the 4-month consolidation. We like August's open on Tesla. But since you're well above August's open, I mean, just look at the trend you put in August. So we want to see the midpoint of August hold. That's here. We get down there. That's where we want to be a buyer. If it breaks below that, then you're still just overall in this big ass range. All right, so Jasmine is not broken down yet, and it's back up to there. So that means you're trying to close higher 5-minute candles. You are closing higher 5-minute candles again. Not higher than this one, but you're probably going to. This looks bullish. So it doesn't look like it's going to work. It might work out later on today, but it's not working right now. The gold short is starting to work. This is starting to work. We just took out yesterday's lows. That's good. We want to see yesterday's lows hold. We're back under July's open. That's good. That's what we want to see. This is going to have bullish ramifications for risk markets. And speaking of bullish ramifications for risk markets, let's look at the risk markets. Oh, it's right back up again. Look at that. Yeah, it's bullish out there, folks. It's bullish. I don't know about Jasmine, but I think the fart is headed for the basement. I agree with you. It looks bad. It gave back all of July's gains, dude. All of it. We're under July's lows. So not only did you see a massive expansion in July, you even seen a breakout above May's high. It couldn't sustain the rally though, and it fell back under May's high. And let's get rid of all these lines and just focus on that, because this is a learning experience for you guys, right? That's what I'm here to do. I'm here to teach you. So this is the range, objectively speaking. Because when you broke out here, you were trending. Clearly, you're in this range, but I'm talking about, more or less what you got going on here. Breakout, the low held. Boom, perfect. So you tested yearly opening range again, it held. So in July, you open, boom, you broke out above the May swing high. Look at that. Very next day, boom, boom. So what happened here? Profit takers that bought the year open took profits. This isn't because of short sellers. This violent retracement lower is literally huge positions selling. They're taking profits. Why? Well, you just broke out above May's high. That's a profit-taking target. So many people with such big money did it, it literally caused it to puke back down. And once this happened, then the short sellers jumped on it. Puked all of it back out. So now look at August. You were nice, open, set in your low down here, higher low, expansion. Then more sideways garbage, year open, test again. Okay, let's buy it again. You did set a higher high on August here, but you couldn't even get back half of July. And then puke. I think Fartcoin is done also, but I don't want to sell it here. We shorted Fartcoin up here. We shorted Fartcoin on this freaking day because of the objective analysis we have. We shorted based on it. The same thing. So yeah, it was a great trade. There's a liquidation point down here. That's going to be June's low. So if you break out below June's low and get continuation lower, yeah, it's hard to say where this thing falls to. Next area would be down here. But that's your real expansion. Yearly low to yearly high even. Yearly low to yearly high. If this area acts as resistance moving forward, then yeah, I would have a target of 45 cents on Fartcoin. That's if it fails to break out with any kind of upside continuation above the year opening range or August's open. But I definitely cannot be shorting August's low. I can short August's open if I'm expecting lower August lows. That's a 13% trade. Shorten the August open. Just to have a target back down to August lows is a 14% gain. So we're definitely going to keep Fartcoin on watch, and we definitely have a near-term bearish bias on it. We just can't do anything with it today. Not today. There will be an opportunity on this up here, for sure. If it gets back up there. Unfortunately, we don't know if it will get back up there or not. We hope it does, though. Woohoo! Yeah. Bill, and we will jump all over that. Tesla just retested breakout trend line and is bouncing currently. Yeah, that was written early. Gold moving out of range. That's what we want. We want gold to move out of the range. We want it to continue to push lower. So once again, we have another pattern here on gold. That's just the pattern. We don't care about the pattern. The main thing that we're focusing on with gold is we need to get way down here before you can say it's a real breakdown. But this is what we're targeting. We're not even targeting down to here. I think, what is our downside target on that trade on the GLD? 303. So this is where we're targeting. The close of July. That's our downside target for the month of August. It looks good, like the buyers are stuck. Anybody that bought up here, they're stuck. They're stuck good too. So I think our target will be hit pretty soon. Hopefully this week we can get out of it and look for a new trade on it, right? Just keep stacking the money, man. Just keep stacking the bucks. The trade does look good. We're half in profit already. Here's the trade. The trade in question. It's right there. We got plenty of time on our premiums, so we don't have to worry about theta decay. And you can see we're already, our one long put is in the money already. So we're doing good. We want this yellow line right here to come down to here, and then we can get out and we'll look to put on a new trade. We know what we're doing. We don't win every trade, but we win a lot of them. Right now, GLD is currently testing the 200 simple. So wait, sorry, you lost the 200 simple, didn't you? Yes, okay. So you already lost the 4-hour 200 simple. It's that EMA, that pesky EMA. It's still there, so it could still bounce. Could still bounce from here. But yeah, it's starting to look better. We lost it here and got it back, so I'd like to see us lose it again. but it's still it's the same exact thing as Tesla, right? It's range bound, so trend trading strategies don't really work that as often as they do on a trading or a trending asset class. You're in a 4-month range here, so we're just wanting to see if it can get down near the July open, and we'll get out, and then we'll reassess. As if it holds support down here, we're going to probably be a buyer. Like, we'll probably buy the 305s and sell the 310s or something like that. You know what I'm saying? If support holds. Or we could sell 298 puts and buy the 304 calls. Like, we could put some kind of a strategy on like that. So we could use the premium that we're selling puts on down here to pay for the call up here. And that's a pretty good trade as long as it doesn't break down. If it breaks down, we'll be in trouble with that short put. But yeah, we'll figure out a trade to take when we close this one. But this one still has plenty of time on it. Hopefully we break down today and close the day down around 305. If we do, we'll probably be able to exit that trade by Friday and be able to look for a new one. But your dominance chart is breaking down, guys. So the Jasmine short not working. Dominance is breaking down here. So I'm done with Jasmine. I'm out of it. I'm done with it. I don't care if it rolls over now or not. Don't care what happens to it. The dominance chart is putting a bid under alts today. So let's see if this thing is probably getting ready to rip some faces off. It's not going to rip my face off, but it's going to rip somebody's. Oh well, it happens. Compound. What does it look like? Yeah, Compound was a sell yesterday. Dominance is too weak today. It looks to me like Bitcoin and a few other things. Bitcoin, Ethereum, even Book of Meme. Why is Book of Meme up 5%? This is a meme token. What is going on here? This is a meme token right here. I don't know if this has any utility. Let's ask Grok if it's got utility. The term bone. Oh, shit. There we go. Book of Meme. Yeah. Cryptocurrency or something else entirely. Since your question doesn't specify, I'll assume you're referring to the Book of Meme token on Solana blockchains. It's a common reference. If you meant something else, please clarify and I'll tailor the response. You're good, Grok. You're good. I just didn't want you to think that it have anything to do with any other question that I've asked you today. Because Grok has a bad habit of doing that. Oh, since you asked about why is the river water wet, I can't figure out why BOEM would have anything to do with wet water. Yeah, but anyways, medium of exchange tokens. BOEM tokens are used within the Book of Meme ecosystem to facilitate transactions such as assessing tools, trading memes, or engaging in platform activities. This makes it a functional currency for interacting with the platform's features. Governance. BOEM token holders have voting rights, allowing them to participate in decision-making processes that shape the project's future. This democratic approach fosters community engagement and gives users a stake in the ecosystem's direction. NFT integration. BOEM is closely tied to non-fungible tokens, NFTs, particularly through staking Bored Ape Yacht Club NFTs to generate Bone tokens. This creates a link between the NFT and meme coin ecosystem, adding value to both by enabling users to mint and trade meme-themed NFTs. Decentralized meme storage powers a platform that uses decentralized storage solutions like Arweave and IPFS to permanently archive memes on the blockchain. It has a little bit of, yeah, it's not just a straight up meme itself, right? And since it's not straight up a meme itself, then it looks like it's getting strength from Ethereum and the weakening dominance. As long as dominance is rejecting 60.83%, we have a bearish bias on dominance. So Ethereum, BOME. Well, BOME I still like for a short if it rejects here. This is a lot of momentum and upside momentum today, and I do not like shorting into a lot of upside momentum. But if it rejects right here, I can still look for shorts on Book of Meme. It's very thinly traded, so be careful trying to put on big size on this. It is a very thin liquidity asset. It's very thin. So we'll see what happens here. Pepe's even up on the day. That's because it freaking opened at the lows. So that's probably why. That's the only reason why alts are bullish today. So Hyperliquid is an exchange. It has utility. They do make money. As long as they're onboarding users, as long as new traders are using the Hyperliquid exchange to trade on, they make money by fees, and then they take the profits from those fees, and then they rebuy tokens. So as long as the alt season is still up, Hyperliquid is a good asset to potentially buy. Where? Well, support. $42 is the area to watch for support. If you blast right through there, then you're not looking to buy it. I could probably buy an August open retest. Bitcoin looks okay today. It's probably trading into resistance like everything else is. It is, but there was your rejection there. So the sellers, the ones that tried to short every wick high today, they finally got in there. That's where they're waiting. They didn't get in right there, not all of them. As long as the support is holding above that, then I don't like Bitcoin lower. Plus, Bitcoin might be putting in a double bottom down here on the near term. That was a pretty momentous, good trending day yesterday. Why did it stop? Why did it stop? I mean, it was a very, very good trend. Here was the open, and then it faded around noon and trended lower, so it has stopped. Are we going to expect something similar today? Well, right here is the price to watch. 119, or just call it 120. That's your high day close resistance. That's the highest daily closing price on Bitcoin. So that's the resistance we would expect it to fail at, if it is going to fail. We don't think it is. Not as long as risk markets are making fresh daily highs, fresh all-time highs. We're not expecting Bitcoin to fail. There is a gap under Bitcoin on CMEs that people are looking to fill. That gap is right here. So that's the gap they're looking to fill. That's why people are shorting Bitcoin. But it doesn't look like a short. Not yet. Litecoin is pushed. Litecoin looks like the short might be done. So we would have expected this to be the trap. Basically, if you have a short bias on Litecoin still, you're going to want to see no higher closes than wherever this thing closes in 18 seconds. I don't have the weekly VWAP on there. Why not? Let's go get it. It needs to be green. Sorry. That's the wrong green. Sorry. Puke green. We'll see if it pukes at the puke green volume weighted average price. Jasmine pushed up to 6.32% and made a higher closing 30-minute. Are we seeing the point of control move yet? Still not a lot of volume coming in up there. There's not really a whole lot of big selling jumping in up here. This is also a thinly traded asset. Let's get rid of some of these moving averages. We really don't care about these. Only this one. Yeah. Solana's back above its VWAP. These look like this pattern that you got since the news. It literally looks exactly like the risk markets. Big spike up and upside continuation. Big spike, upside continuation. Apple's pushing higher. Tesla's might be finding support. MSFT's pushing higher. And Nvidia sold off at the bell, but is now back above volume weighted average price. Look at your ADD. You pushed down into 870s, but now you're making fresh highs. This means your overall market, not just tech, is up. That's your advanced decline line. That means the rest of the market is bullish. We can also pull up our sentiment gauge and see if those sentiments came back. Remember, they pulled back. Yeah, they pulled back. Stock market sentiment pulled back into the 50s. It's pushing back up. Crypto's pulled back to 60s, light 60s. It's pushing back up. So sentiment is bullish. So let's do this. This bonk still has a long way to go up, right? Before it starts to look bearish again. Because you got the August volume weighted average price here and this week's volume weighted average price crossing August. So this would be the next area where we would be interested in shorting bonk. So I'm going to go ahead and close my bonk trade. Okay, I have the short on bonk up here, so it could push back up to there. So I already made $253 of profit, and we have still $200 of unrealized gains. So that would make the profit total, $460 on this trade. So we're going to go ahead and close it and then look for a new entry higher, since everything is still so bullish out there. Even though this is a meme token, let's see if we can get a higher 30-minute close first. Let's do that. Let's wait another 25 minutes and see if we can get a higher 25-minute closure here. If we do, then we'll close it and we'll keep the what? $180 or whatever it ends up being. And then we'll just look for new short entries later on, because it might not be a short later on. If sentiment stays bullish, we might be looking to be a buyer of this, or at least a buyer of Pingu, because it's more bullish on the year still. Right? It's still up on the month. It's still up on since July. It's above the yearly open. It's still pretty strong. So this is going to be like a pullback in an uptrending market for now, until it proves otherwise. But it is in a longer term range. So you're in a 2-month range, I guess. Okay, so this range, we can just look at it. It's the weekly range that it needs to break. So let's put that week range low. Boom. So we'll know down below this price. That would make us more bearish, right, than bullish if we get under that. My bearish bias will start under this, but let's just look at something here. Oh yeah, it still has a very, very bullish structure. And a bullish, it's not an engulfing candle because you didn't take out the previous candle's low, but it is a nice move off of support. Let's see what it does. Do you think that the daily spinning star like candle from yesterday is a sneak peek of a bear market? No. No, we've already had a bear market this year. Do you know how? Let's ask Grok. How often has the SPX had 2 bear markets in a year? A bear market is typically defined as a decline of 20% or more in the S&P 500 from the most recent high. To determine how often the SPX has experienced 2 bear markets within a single calendar year, we need to examine historical data. The provided web result offers insights into the frequency and timing of bear markets, which we can use to address this question. Based on historical data from 1928 to 2022, bear markets in the S&P 500 are relatively infrequent, occurring roughly 3.6 to 5.5 years on average. So anywhere between 3 to 5, depending on the source. Sources indicate that bear markets are often separated by significant time periods, and multiple bear markets in quick succession are rare outside extreme economic conditions such as the Great Depression. We're not in a depression. We're not even in recession. Right? We're in a rate cutting environment from the Fed. That's not bearish. We're not seeing a significant incline in unemployment. We're not seeing a significant incline of inflation. The only period with multiple bear markets in close proximity was during the Great Depression and its aftermath, late 1920s to early 1940s. Specifically, the Great Depression, 1929 to 1932, saw a prolonged bear market with multiple significant declines, but these were part of a single extended downturn rather than a distinct bear market within a single year. For two bear markets to occur within a single year, the market would need to decline by 20% or more from the peak. Decline again by 20% or more with the same. This scenario is highly unlikely due to the time required for recovery and the rarity of such rapid successive declines. The sources indicate that even during volatile periods, which we are not because the VIX is under 16, bear markets are typically spaced out over multiple years. The 2020 bear market, COVID-19 crash, 34%. The 2022 bear market, 25%, occurred over 3 years, not within a single year. And also since we've seen a bear market in 2020, and then another one in 2022, and then another one in 2025, literally like 3 bear markets in a 5-year period. Another bear market, another one this year or even next year or the year after that is so unlikely. This AI can't even give us an answer. Like, no. Okay. With this data, would you, if you were a trader, short the SPX, expecting a bear market? As a trader considering whether to short the S&P expecting bear market, I approach the decision by analyzing the provided data such as historical context and market dynamics. Just, gosh, dude, that was a yes or no. I'm not reading all that. Yeah. Let's see if he gives us as a trader, I would not short the SPX at this stage for several reasons. Policy and Fed support, tax cuts, and potential Fed rate cuts provide tailwinds that could limit downside. Markets have already absorbed much of the tariff fear, reducing the likelihood of a sudden collapse. Volatility risks. A bear market, if occurs, will likely involve sharp swings. Shorting the S&P outright would be, well, I get that. We know that. Yeah, nah. The data presents valid bearish concerns. What? High valuations, economic slowdown, tariffs, AI risks, but the bullish case, momentum, earnings, policy support, Fed flexibility, and historical patterns outweigh them for now. Shorting the SPX, expecting a bear market in 2025 is premature without strong. So anyway, yeah, no, we're not looking for a bear market. Now, if you're talking about a bear market in altcoins, that's much, much different. Arguably, you've already got one on Farcoin, right? Using the same context as a 20% decline, you're in a bear market on Farcoin. But I wouldn't use a 20% decline on Farcoin to determine whether or not it's in a bear market or not, because this thing moved 20% yesterday down. It moves, man. It moved 20% in a day. I would just say you're down on the year. So as long as Farcoin stays down on the year or under August's open, we can have a short side bias on Farcoin only, based on its technical structure, based on its fundamentals, as it's a shit coin. It has no utility, right? It's a meme token, all those things. We can have bearish bias on this. The rest of alts, that are above the yearly opening range and trading above August's open are objectively up and trending higher. Guys, it is not time to be bearish on the marketplace. The odds of you seeing a substantial down move on ES and NQ right now are so beyond scope. It's not even a question. Not even a question. No, we're buyers of the S&P 500 right now. And we're going to continue to be a buyer on the S&P 500 with every 3, 5, and 10% correction moving forward. All the way until the end of 2026. Unless significant changes happen in the unemployment numbers and in inflation readings. Other than that, you have to have a bullish bias, not a bearish one. But that doesn't mean we can't find shorts. We're short right now, GLD, for instance. Right? We're short that. We were looking for a short scalp on Jasmine today. It did not work. Did not work. So, yeah. This is what happens when you're trying to short things in a bull market. The shorts don't work that often. Longs do. But who wants to get long an asset after it's just declined 20% in a day? Well, that might be the best time to get long an asset. You know what I mean? Farcoin might not be a short. It might be a long like nobody's business down here. The only reason, like there's a low down here that it could liquidate before finding a significant buyers. But I don't like have an account with CoinGlass. But if we look up Fartcoin and look up liquidation levels on Binance, you're at the bottom. Like, you dried up all the liquidity down here. Now there's more liquidity, new liquidity. So it could literally go down and get that. But like, you're at the bottom of the chart. I can't even move the chart up or down. You can move the chart up or down on the third model, on model 3. You can move it up or down, but you have to have an account, I think. See, like, I can move this one up and down. But I can't move model 1 up and down. Model 1 is the only one that I can even look at Fartcoin on. So, I mean, looking for more serious downside is, well, for right now, according to this indicator, there's still more liquidity on the downside than there is on the buy side. I think this uses historical data, though, baby. I will take one of these. To get your liquidation levels. Like, it's not looking at limit orders in the market and throwing up where the limit orders are. It just uses past price to generate those levels. Might be time to be a buyer on Fartcoin. I don't know. Here's what I'm going to do, like, continuing to move forward. If total 2, total 3 look bullish, I have a bullish bias on the market. The others, this takes out, like I said at the beginning of the stream, it takes out your top 10 market cap, alts, and Bitcoin. This would include things like your tethers and other stable coins, the big ones, USDC. This is like your low cap alts, right? And it's up, like, it's up. It's down on the year. That's weird. It sure is. It's down on the year. But this is a rounding bottom down here. Very much so. One could arguably call this a cup and handle, depending on how you draw it. But I'm not a pattern trader. I trade the ranges. But yeah, you can arguably call this a cup and handle formation on the other's chart. So alt season isn't done yet. Isn't done yet. This one doesn't look that great. This is dominance though. Total 2 and total 3 look good. I mean, that's a clear check of the yearly open range and a bounce. Your bears had it, they lost it. They're still trying. Of course, there's always going to be shorts happening at every single day swing high, every single daily swing high. There's going to be shorts. There's even going to be shorts setting at every single daily low, because unfortunately, retail takes shorts at terrible, terrible places. I'd be waiting to take a short at the daily low. Oh, on Bitcoin. Yeah, no, Bitcoin is a risk-on asset. Bitcoin is a risk-on asset. So we can simply do this. We can get rid of all the indicators, all the lines, and we can compare it, right? We can compare it to weekly S&P 500 charts. And we can clearly see that Bitcoin is following the risk on markets. If we throw this on log, it looks even better. So for one to say, hey, not Bitcoin, not S&P 500, but Bitcoin, you're in a sense saying the S&P 500 if you have a bearish bias on Bitcoin. Clearly, these things trade together. I mean, this chart is not so much through this period, but definitely for the rest of its lifetime. And especially since you got all those ETFs. No, we'll watch the ETF flows. We'll keep our eyes on it. If we start seeing significant outflows happen over a large period, not just one day, like if we start to see something like this week on week on week, then yeah, we can start to look for Bitcoin shorts. But guys, if you can't be bearish S&P 500, you really can't be bearish Bitcoin either, unfortunately. That's what I've been screaming for years. Bitcoin is a risk-on asset. It is not a risk-off asset. When risk is off, so is Bitcoin. Now, Bitcoin is a risk-on asset. S&P 500 and NASDAQ and Bitcoin, all three risk-on assets. I hold Bitcoin in a cold storage wallet. A significant amount. It's not significant to, say, someone like Michael Saylor. It's more significant for someone like me. For me, my risk parameters, the amount of Bitcoin that I hold is a little bit more than I would like to. It's a significant portion at this point of my whole entire portfolio. I don't think that we're going to see massive gains anymore on Bitcoin based on the ETFs. I think Bitcoin's volatility is going to significantly decline. And now that Trump has made it, or is in the process of making it legal for people to put Bitcoin ETFs into their 401ks, you will probably get a Bitcoin VIX, like a VIX.BTC or some Bitcoin volatility metric. So that way we won't have to look at the VIX anymore to basically give us we know that Bitcoin's volatility a lot of it is gone, right? Like, it was extremely volatile through here. And then when it bounced back up, it was even volatile to the upside. But that volatility has been since significantly reduced. Another indicator that you can look at to see volatility expansions, there's one that Eric Crown made called the BBWP, which is the, I don't remember what its name is, BBWP. I know I have it on one of these charts. Let me go look for it. What's this? Right there. All right, so this chart. All right. Let's get rid of everything. It's called the Bollinger Band with percentile. So you would just type that in your indicators. Bollinger Band with percentile. Oh, maybe you can't do it anymore. Try BBWP. There it is right there. The caretaker. Right there. And it's right here. It's an oscillator. And it oscillates to the upside when there's a lot of volatility. Volatility is expansion. Now, this is not a directionally biased indicator. It's only letting you know when volatility is expanding. If we pull Bitcoin up here, it says on the 4-hour we have high volatility right now on Bitcoin. We look out at it on a daily, you have very small volatility, but it is expanding to the upside. That's going to be based on yesterday's price action, the last 3 days. So this can expand even as price goes up. Or you can just simply look at a Bollinger Band, period. Whether you look on a daily, 4-hour, or whatever, just throw a Bollinger Band on it. I don't have a Bollinger Band. What happened to my Bollinger Band? What the hell, dude? There. So when this is going in, when the top line and bottom line are going in, right? So this is out. This is in, right? When the 2 points are pushing towards each other, like this point is pushing up, this point is pushing down. That's a compression of volatility. So you had a move lower last week, that started the volatility expansion. And since that time, you've been holding steady with volatility. You can use the Bollinger Band to identify volatility. It's probably going to be a little bit more useless on the smaller time frames because you're going to expand and contract. You're seeing a contraction now because of yesterday. We had a nice big explosive move to the upside and then a nice move to the downside. But it looks bullish. It's holding support. Yeah, I mean, there's a lot of different ways we can anticipate volatility, or you can look at a TTM squeeze indicator. That will also identify an upcoming volatility move, potentially. That's another oscillator. So right here, basically you want to get involved in Bitcoin when you are showing red. Red, because you're sideways, right? You're sideways. So when you're sideways, when price action is extremely sideways for a long period of time, then you can see how volatility is compressing. So you know a big move is underway. Whether it's up and down, we don't know. We won't ever know. But if you're a Bitcoin trader, for instance, back in these days, you could have said, well, I don't necessarily want to buy support tests right now because we could see a spike of volatility that could get much lower than support. And there it is. There was your spike in volatility to the downside. Volatility starts expanding. It's getting larger as price is going down. But this could also go up. It didn't go up. It only went down. So there's plenty of indicators that you can look at to gauge volatility. So if you want to be, if you want to be looking for volatility, a big downside move right now, you could see a bigger downside move because volatility is higher on this with the indicator, but we know that it isn't based on the VIX. The VIX is very low. The VIX is putting in lows, fresh lows. That's good for risk assets to continue to move higher. All right, we've been going for a while now. We're going to wrap it up. As most of your things, like Tesla has found support. We were looking for it to do so. I don't know if it found support at the area it did. So we were looking for it to find support here. We want to see if Tesla can maintain a support hold. So in a sense, you just filled this gap. Not all the way, but, well, no, you didn't. Not really. Maybe wait for that to happen before being a buyer on Tesla. Maybe wait for 330 to see what Tesla does at 330. If it gets down there before you buy it, looking for that larger move that we are expecting on Tesla. We are expecting a large upside move. We are expecting Tesla to be testing the yearly opening range at some point this year. So we could go out in theory and put on a long-term spread on Tesla. The problem is I haven't been able to find one that's cheap enough to do. Because when you get out to December, you're looking at $38 premiums on Tesla. So it makes it very difficult to put on a spread trade when you've got premiums this expensive. But since we know the year open range on Tesla is 390, and we are expecting this level to be tested by December, then we want to go way out in time in December and look to put on a call spread. The implied volatility climbs the higher you go, so that's kind of okay. So 390, huh? Okay, so we don't want to do 390s. Let's do 350s. The 390s. What does that look like? So that gives us a favorable risk to reward of 2-to-1. And we won't be risking the entire $1,300 because you have 129 days of theta decay. So you will lose a little bit of money every day on the premium, but you won't lose a lot of money till you get down into under 45 days. Once you get under 45 days, the premium starts to peel away. So we could literally sit in this trade for 30, 40 days and keep a significant amount of this premium. We just need prices to go up. And then we could, in theory, make money on it, because we do expect it to test that by year end based on current market dynamics, the Fed and interest rates and inflation and all that stuff. We can have a longer term bullish bias on Tesla. We could tighten that risk also by shrinking the spread. So instead of selling the 390s, because the year open range is 390, we could go $2 or $20 under that, and you can see how that significantly reduces your risk and still has almost a 2-to-1 risk to reward. Or you could fluctuate it. If you want to be up at 290, then go to 370. And that gives you a 3-to-1 risk to reward almost. And you're only risking 585. So if Tesla at some point this year, before December, before November, half of November preferably, but if it does test the year open range by December, this trade will pay. It will pay. It'll pay you good. Now that's if it does, if you have a bullish bias. That's what options are used for, right? They're speculation vehicles. Their main reason was they were designed for insurance. But most people use them to speculate, more so than insurance. But the real use of it is for the insurance purposes. Like you own Tesla at 330 and you want to defend what you own. So then you would go in and use those puts to offset that risk. That's their purpose, their true intention. But they can also be used for speculation. They're fantastic. I love options. Absolutely love them, especially for small accounts. Like if you don't have enough money to go out there and buy 100 shares of Tesla, I mean, that's a significant amount of money. You're looking at over 35K there almost. So if you don't have that in an account, then obviously you can't buy Tesla. Well, you can. You can only buy a few shares, 1 or 2 or 10 or whatever you got. You can still control 100 shares via options. That's why they are fantastic. But the way people teach on YouTube how to use options, not everybody, but a lot of what I've seen, is literally the wrong way. You don't want to be buying 1 week or 2 week out premium. You're probably going to lose that money, especially if it's already had an expansion. So like if you're going to buy options, you want to see this. You want to see this. All right. First, wait for the asset to go into a very tight range. Then you can buy out of the money puts or calls. But if you are already expanding, volatility is already expanding, you don't want to do that. So like right now, Tesla's been going up since these lows back here. That's July the 7th. Tesla's price has been going up. So if you go buy way out of the money calls today for 2-3 weeks out, how likely are you going to make money? You're not. It could go into a period where it does 10 days sideways in here because you've already seen a significant expansion. You're not going to see a more significant expansion happen after that. That very rarely happens. Look at Pepsi. We bought Pepsi when it was very sideways. Very sideways. down here for a long time. We waited for a liquidation run lower, which we got. Then we bought calls. We bought way out of the money calls. And it took a long time for us to get that money, didn't it? You had 1, 2, 3, 4 days of expansion. 1, 2, 3, 4. Well, here, I'm not going to count it. I'll just do it like this. You had 10 days of sideways after 4 days of up. That's 14 days. So if you bought Pepsi down here and you bought the 140 strike because it was super cheap 14 days away, you were right on direction and still probably lost money on the trade. Well, based on this expiration happening on this Friday, you probably just barely made money. Like just barely made money. Just by the very skin of your teeth did you make money. Now, if you went way out in time like we did, you were golden. You were making money on this day. This was our risk down here. This was our reward, or where we started to get in the money, where we could make a profit. Up here, we were in the money. So that's max, like almost max profit at that point. But then since that day, what has Pepsi done? What has Pepsi done since July the 17th? 18 days. Pepsi has done nothing. It has moved nothing, hardly. This day closed at 145. 14 days later, you're trading at 145.98. Like, you've gone nowhere in 14 days. If you, like, just be careful with the traders and the YouTubers that you guys listen to. They really are, they're telling you wrong. Most of them. The things that I hear people doing are just absolutely bonkers. You got to know how this stuff works in order to make money. You can't have crazy expectations and a very inordinate amount of time. Like, no way it's going to happen for you. It's not. Now, if you go out and buy those, like, I love to give this example when it comes to options. If you watch the Big Short movie, the two young boys that live in the mother's garage, they did a phenomenal job before the Big Short ever even took place. Now, let's be honest, that was a massive risk that they took because they were so over-levered. They were beyond levered. So that's why they got rich, because they were so over-levered. But before that, they turned 100K into what, $10 million? That is phenomenal returns. And all they do is they look into companies that they think are going to make money, and then they use very small risk, way out in time, cheap premium on options. They're buying way out of the money calls on things they think are going up, but like leap years. They're doing it like years out, or as long out as they can. They're giving the premium time to work for them. So they put on a trade. They don't need it to work in the next 3 to 4 months. It can work later. That's how they're making money. They're betting on time, not so much the price. Options are phenomenal when used the right way. They're absolutely fantastic vehicles. IWM looking good. Looking good. Looking good, boy. That trade's already up nicely on the day. Yeah, that's what you want to do. You want to be, be smart. Be smart with your money, guys. I want you guys to get rich. Quit just gambling it. Quit throwing it away. Quit doing 100x trades on Bitcoin. Please stop doing that. I will help you make money. You just gotta listen. Excuse me. Yeah, you're good. You don't have to apologize. I wasn't giving you shit. I was just trying to help you understand. Like, yeah, Bitcoin is absolutely a risk-on asset. LTBR ripping now. Been looking for a buy, but never got in. So I went with other nuke stocks. LBTR, is that going to be one of those Bitcoin plays? LTBR, Lightbridge. Never heard of them. They're exploding today. That's because, yeah, I don't know why. Did they own a lot of Bitcoin? Is this a Bitcoin trade? A new Bitcoin thing? I mean, the trend looked good. It looked like it was going to break out eventually, didn't it? Yeah, $7.50, $6.50, even $9, it looked okay. It's just now moving today. So I don't know if I would get involved with it today or not. You're exactly right. There is a chance that it could keep going up for the next 2 or 3 days if Bitcoin does, if this is related to Bitcoin. I'm not hip to all those new Bitcoin trades, those Bitcoin stocks. The stocks that were useless until they started buying Bitcoin. Like, yeah. The cash market, S&P 500, just made a fresh all-time high, by the way. So 64.2702. Yeah, we got a 64.2875. So you made a fresh cash market all-time high. Dominance still going the right way. Gold is going the wrong way. So gold is going the wrong way because the dollar is still rolling over. And the dollar is still rolling over because, well, the dollar is going to be weak. I honestly did not think it was going to break down through this trend line before the rate cuts. But people are pricing in those rate cuts now. That wick is fake. Ignore that wick. But that news today got people shorting the dollar right at a major support. This is a huge support line. If the dollar breaks free of this, I'm going to be so happy holding Bitcoin longs. I'm going to be so happy holding risk assets long, guys. This dollar breaking down much quicker than I thought it was going to. So I'm actually not missing out on it because I took that USD JPY short. I tried to get you all in it at the right time as well. So we can participate in it. We shorted it up here the day before NFT. NFT gave us our move. We just need the dollar to be weaker than the yen. That's all. And this will work. This will slowly migrate lower. If the yen becomes weaker than the dollar, then you'll get a lot of sideways, choppy abomination. And trust me, Michael Boutros, that's what he calls the yen, the USD yen. He calls it the abomination. Because of this freaking price action. This is garbage. That is terrible. I mean, it did trend lower, but damn. And the problem is the yen will be weak if the risk markets are going up, because the yen is a risk-off asset. But you just need the dollar to be weaker. And that trade will pay us. Let's over time, of course. Oh yeah, the yen is strong today. That's what? That ain't right. Let me go look at it over here. This ain't real-time data. This is going to be having a 15-minute lag period. But this is live data over here. See, that's why I don't pay for live data on my yen or on my futures on whatever. Damn it. Tasty Trade, Tradeovate, Thinkorswim. There's just so many platforms to keep up with. TradingView, I don't pay them for futures data because I get it for free over here. It's kind of a waste of money, if you ask me, to pay them for futures data because you can download this platform for free. Yeah, you do have a strong yen today. So that is helping the USD JPY short. Weak dollar, strong yen is definitely going to help that trade. That is a long-term trade. Wait a minute. Well, no, I don't want this. Where are my ideas? Well, anyway, I posted it. Let me see here. I don't very seldom ever post anything on this. Right here. So I posted this a long time ago, July 28th, and I have a 135 target on the year. But if you push play, you're going to see it went all the way up here. But this was the bearish and vow. We had NFP coming up one day away, so we could short it up there with the NFP. And then NFP came in, and this thing has dumped so far. So we want this to slowly migrate down for the rest of the year. That will be the trade idea. And then the GLD breakdown. And then we were looking for a small correction on the S&P based on the fact that it had 20% in 60 days. Since the 1990s, we've seen many times where the broader market, SPX, has seen pretty significant pullback, more than 10%, and then rally. Almost every time the market rose more than 20% in 60 days or less has been a good place to take profits. Clearly, everything is super bullish right now. I'm not saying this will be the top. I'm simply saying we could experience a correction driven by profit taking. In an uptrend, you want to be a buyer on pullbacks, so a pullback could give us another longer term opportunity. But we are looking for a correction here, and there was a very small one. This is a weekly chart. Damn it, why did I post that on a weekly? There was a correction on the S&P, but it was just that, a 3% correction. It took a little bit longer for that correction to happen. But there's the correction. 3%. You're making fresh daily or fresh all-time highs right now today on the cash market. Your high today is 28.75. Your high over here was 27.02. So you have a fresh cash market all-time high. Yeah, guys, it's bullish out there. Buy dips. You met Eric Crown in Greece with his girlfriend Elsa. They are funny. We had such a great time. Awesome. He seems like a nice guy. I've never met him. He seems like a nice guy. Good trader. He doesn't lead people astray, I don't guess. I mean, he looks at a lot of the same things that I look at longer term. He's also a near-term trader, I think, or he used to be. I haven't paid attention to any of his videos. A long ass time. Last time I watched one of his videos was a long time ago, so I don't know what he's up to nowadays, but he's a good guy. Got no problems. All right, we're gonna wrap it up. Our short on that Jasmine did not work. That's okay. We still got some money we can take off on that bonk. And then we'll look how things look later on in the week. Give the markets time to suss out direction. But as long as dominance stays weak, like that, gotta have a near-term bullish bias on alts. Just pick good alts that have a use case. Solana, Hype, Ethereum. Those all have a use case. Things like Fartcoin, Penguin, and Bonk, not so much. But even they're rallying today based on this dominance weakness. So you're making a higher close and a higher high on Bonk. Now the sellers will show back up here on Bonk, but not before that. Like, I don't like it before that. And Fartcoin, we'll look at shorting it at the August open and as high as back up here, but not down here on these lows. I guess we could watch the August open first, is what I said earlier. See if we find resistance in there first. Of course, you got the yearly and then the midpoint, all that in there. So that's a pretty big chunk of change on Fartcoin, but it's a 4% move. We'll see what happens. Yen strength on a day when we have the S&P making fresh all-time highs is weird. So even the yen isn't trading like a risk-off asset today. It's trading like a risk-on asset. What is the Swissy doing? Let's see what the Swissy's doing today. Because if this is... Oh, it's up too. I don't know. That's weird. Swiss franc, Japanese yen. Well, here, this just proves it right here. Like, the whole year, the Swiss franc has been rallying. It's not a risk-off currency anymore. People just like putting their money in the Swiss franc. Huge rally all year with the S&P. So these aren't even trading as risk-off anymore. You had a massive rip right there based on that down move, but since then it's been trending in pretty much the same direction. Maybe we see them start to rotate capital flows out of the Swiss franc into this. So we might be able to see a small correction on that. But what would we trade it against? What would be a good thing to look for a pullback on the Swiss franc against? I don't have any Swissy pairs. Definitely not the USD Swissy. The USD Swissy is... If you got USD weakness and weakness on the Swiss franc, then you don't want to look. You want to trade a strong pair versus a weak pair. Euro Swissy. That's a perfect one. Euro is strong as crap today. Oh yeah, this is getting ready to break out of a massive range. You are breaking out right now. June highs. Damn it. Since when did Oanda get all gappy like this, dude? Why does Forex.com look better than Oanda? It used to be the opposite. When did that start happening? I don't remember when. This is not gappy. Euro Swissy versus on Oanda is gappy. Look at this close. That's a Monday. This is a Tuesday. Why the big ass gap down? These things don't close. These markets don't close. There shouldn't be a gap here. What the heck? Gap here. You close there, opened way down here. This thing is gappy as hell. No gaps. I don't like Forex.com spreads though. They're high, but this is going to be a long for me. If it can hold this breakout. Now I know it's already moved, so it's not, we're not talking about today. We're not talking about today. But moving on, this is a breakdown after a failed breakdown, right? You failed the breakdown, now you're back up here breaking out. So this could expand another. So maybe. But that's only if you get a Swiss franc pullback. But why would you when it's super strong today? We might be buying Euro Swiss soon. For a breakout. It's already moving, so we're going to need it to pull back a few days. But then we'll look for something. And we definitely want to be dollar shorts. We got dollar shorts on, so we could look for pound dollar. Longs maybe? Where is it? Where is it? Because euro dollar longs not going to work. I don't want to buy euro dollar longs because it's already so extended. But it can stay extended, and to be honest with you, euro would be the best one to look for longs. Not right now though. The dollar's coming into that trend line support, so be careful. We still have to wait. It might bounce today. That's a big trend line support. You still got 618 down here and the 786 that could act as support. So just because it's falling today doesn't mean you're going to see a trend continuation. We'll see if it does. If it does break down and start to trend lower, then we'll attack it. I mean, this is a failure. It's a trap. So moving forward, we want to see if daily res holds on the dollar and daily supply, because you do have a trap. So tomorrow, we could be a buyer on euro dollar if the dollar rejects here or here. If we're going to see a breakdown of that dollar trend line, then we would want to see support or resistance hold closer than farther away. We'll see what happens. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.